Hello, everyone, and welcome back to Investor Days. We're happy to have Stendörren with us today. My name is Marcus Henriksson. I'm an equity analyst at ABG Sundal Collier. So, as I mentioned, Stendörren is next up, property company with focus on the Stockholm and Mälardalen region, also expanding into Norway and Denmark in recent years. With me, I have the CEO, Erik Ranje, and the CFO, Henrik. Next up, you guys.
Thank you very much, and perhaps we should close the door because there's a bit of a noise. But thank you very much for the introduction. Let's present then Stendörren. Stendörren is a listed real estate growth company listed on the Stockholm mid-cap list. We are active within the asset class logistics, light industrial and warehouse, primarily in the Mälardalen region, as you said. We also have an operation within residential, which may be perceived as odd, being on the sort of industrial side on one hand and residential on the other side. But the industrial logic behind that is location. Many of our properties are in, as you said, Mälardalen and in very urban location, just as Hammarby Sjöstad once upon a time was a Lugnäs industriområde. But I will get back to that slightly later. I mentioned that we are a growth company, and that relates very much. I perceive ourselves as a derivative, you could say, on a number of macro trends. One trend is urbanization. We are located in a geography which is growing economically, but also population-wise. Another macro trend is e-commerce. We do logistics in very urban or locations close to Mälardalen cities. So we have a few growth drivers in the company which fuels the company. Before we go into detail about what we do in the business model, I would like to present a few operational highlights. We released our Q4 report just a while ago, a couple of weeks ago. And if we summarize the year 2022, we have now 8 consecutive quarters with positive and strong net letting. But then I disregard a bankruptcy that happened 7 quarters ago. But I mean, the machinery, so to say, is working very well on the net letting side. And the effect of that is that we have decreased vacancy continuously over the last quarters and have a vacancy of 8% only. And on a forward-looking basis, considering contracted rents, tenants moving in, and also tenants that we know are moving forward-looking 12 months, we have a vacancy of 7%. So it's continuing to go down, so to say, the vacancy. During 2022, the renegotiation led to rent increases of 21% on the rent contracts that were renegotiated during the year. That is a long-term sustainable sort of growth potential in the company, and the reason for that I will get back to. I think one topic that was on everybody's mind just a couple of months ago was to what extent the CPI we would be able to increase make the contractual adjustments on rents related to CPI, and I think a question mark in the market was whether the tenant would actually accept or try to renegotiate the rent contracts. But the outcome is good from our perspective, in the sense that the CPI adjustments were sort of absorbed and accepted by the tenants. We have a strong development when it comes to surplus ratio. Obviously, the surplus ratio improves as the top line increases, but also we have worked on the cost side very efficiently. Utilities costs and unit consumption has decreased, which means that we have actually the surplus ratio is an effect of good top line development, but also cost efficiency. We have had strong traction within product development. We have it says 25,000 square meters to be completed. I think 20,000 of those are now completed and to some extent let already. And we have received a number of very attractive building permits in light industry, logistics, warehouse, but also residential. I mentioned that we are very much Mälardalen focused, but we have over the last, let's say, 18 months also made acquisitions in other Nordic regions, i.e. Oslo, Copenhagen and Helsinki, with the same characteristics, i.e. light industrial assets in city or urban locations, because that's sort of how we think about it, and that's where we see the growth potential. We established a new sustainability strategy 2022. The existing or the previous sustainability strategy covered the period from 2017 to 2020, but we now establish a new sustainability strategy, and I will comment upon that slightly later. Pelle, would you want to go through some financial highlights?
Yes. Our financial key figures, return on equity and NAV growth, has been negatively affected by revaluation of investment properties, minus 143 million for the full year and minus 354 million during Q4. We did some refinancings of secured bank debt before summer 2022, which substantially strengthened our liquidity and also substantially extended average maturity, time to maturity on interest-bearing debt. We had 2.9 years as of Q4. We also increased our interest rate hedging late 2021. So as of Q4, we have 80% of our interest-bearing debt hedged. We also increased our energy price hedging early 2022. We have about 80% of forecasted consumption for 22 to 23 and about 50% for 2024. Our loans, we have green and sustainability-linked loans. About 6% are green loans and 36% are sustainability-linked loans.
Yes, just some data points about Stendörren. We have assets for 12.4 billion SEK. Loan to value below 50%, that's 47%. So a fairly conservative balance sheet in that respect. We are in a high yielding asset class. Our initial yield on the property is at 5.5%. With a long lease duration, we tend to have long rent contracts. So the average remaining lease duration as of end of the year 2022 was 3.8 years, which adds stability to the cash flow. We have 800,000 square meters of lettable area today. We have building rights for 660,000 square meters. So we have a relatively large building rights portfolio, which is a key growth potential in the company. If we look back where we're coming from, Stendörren was established 2014. It was a property portfolio carved out from another property company, put under separate management and listed on First North. And since then, growth has been very much acquisition driven. And I started 3 years ago as CEO, and we have continued that growth journey by acquisitions, but we have also made acquisitions in new markets. But I think primarily we have added the development potential in the company. We have we rezoned an area from industrial use into actually retail use into residential use. Obtained building permit for 800 apartments in Botkyrka, and we have now a pipeline of ready to start light industrial logistics project portfolio. So the attractiveness from an investment perspective when it comes to Stendörren, we have a very stable sort of cash flow as the platform. We are in a high yielding segment. We have long rent contracts, which gives us stability and sort of disclosure into the future. But we also have a number of growth drivers. One is obviously what I said about location. We are in the Mälardalen region primarily, which is a growing region. We are in e-commerce, we are in logistics, which is an e-commerce derivative. We can also convert some of our properties into residential use, which creates value. We have a handful of such projects where we are now rezoning or trying to rezone. And I will show a picture on why that makes sense for us. But another aspect of the fact that there is such a conversion trend in urban location is the fact that obviously square meters in the light industrial segments are then disappearing upon conversion, whereas demand is still increasing. And if supply decrease and demand increase, obviously the price of the underlying item increases, which in this case is rent. And that is why we have a sustainable growth potential in the rents. So the 21% increase in rents upon renegotiation, that is sort of sustainable, has been like that for many years, and in expectation will continue. We have, I mentioned 800,000 square meters of standing assets, 660,000 square meters of building rights. So that is some 80% growth potential more that we can develop in good locations, fairly urban locations. If we dig into the property portfolio a little bit more, some 2/3 of the property portfolio is within light industrial logistics and warehouse. We have some retail space, we have some office space as well, but the office space in particular tend to be in industrial assets. So in a sense, it's not true office risk or potential, if you want. It's more related to the underlying logistics or light industrial operation in that particular asset. Very round numbers here, but 1/3 of the property portfolio is in the Stockholm municipality, 1/3 is in the greater Stockholm region, and 1/3 is in Mälardalen, the rest of Mälardalen region. And for those who do not know Mälardalen, it's all greater Stockholm region, if you want. And then we have bought a couple of properties in the other Nordic capitals, amounting to some 6% of our property portfolio. The source of the rents, or the source of the cash flow, is fairly diversified. We have a diversified tenant base. We have some municipalities, Stockholm Vatten, Nacka Vatten. We have Coop, which is daily goods, obviously. We have an international company, Unilever. We have Swedish engineering. We have a life science company. We have 800 tenants. It's very granulated. The remaining lease duration is 3.8 years, as I said, which is fairly sort of evenly distributed over time. So again, diversified, stable, long-term cash flow. But then we come to growth. I will not go into this in detail, but e-commerce is growing, even though it has been growing a little bit slower post the pandemic. Stockholm regional urbanization tend to be a long-term trend as well, without going into details. So I skip on go to the next slide. Going a little bit into the future here, what we intend to do is to continue to buy in the urban areas where we are, i.e. in the Stockholm region, buy properties. In particular, we want to build critical mass in our new markets, which is Helsinki, Copenhagen, and Oslo. We will continue to invest in our building rights portfolio. We will not buy building rights because we have enough of building rights, basically. So that is the route forward. And the last bullet, I don't know if you saw the press release that we sent yesterday, but we are going out to the market for the purpose of buying back some of our outstanding hybrid bonds, 300 out of 800 million, which is a way of considering the new situation on the financing market to de-risk a little bit and adjust to the higher cost of capital. This is an overview of our project portfolio. This is what we refer to as future projects. I won't go through these in detail, but again, it's 660,000 square meters. It's within logistics, light industrial projects. It's also residential, where we rezone before we can do anything. If you see the municipality, to the extent that you're familiar with the Swedish municipalities, it's in Mälardalen region, almost exclusively. So it's a very sort of attractive project pipeline. This is the ongoing project, and again, it's urban or Stockholm close projects, both within light industrial use but also logistics use. And the 4 at the top are basically completed, except for the one in Uppsala, Librobeck. And that amounts, I think, is 23,000 square meters. And then we have a number of building permits for several of the remaining ones, which means that we are marketing them, and upon signing a lease, we can start the project on a pre-let basis, which is important. That is, I think we have an estimated completion time here, but that is the earliest point of time where we can complete, basically, because we do the projects mostly on the pre-let basis, which means that we need to find a tenant first. I mentioned the residential potential that we have in some of our properties, and this is an illustration, basically, if you look at the residential units here. We bought this property 2016 as a cash flow yielding asset, and the property is this bluish building. The facade is bluish, and the roof is black, and the property goes basically around here. That we bought that as it's located in Botkyrka. Obviously, you see this by the water, and this area where we see residential units is just empty land and a parking lot. And here we rezoned, and we have a now rezoning which has gained legal force, and we have also obtained building permit for 800 apartments. Sorry, 300 apartments, but the rezoning is for 800 apartments, but the building permit is for 300 as a first step. So this is just empty land right now, and obviously this is in Botkyrka. It's a Stockholm municipality, and a better use of land, obviously, than just being empty. So this is the kind of potential that we have here and there in the portfolio. We have another area where we have received what you call positivt planbesked from the Stockholm municipality on rezoning an area of 110,000 square meter close to Drevviken, an overview of Drevviken close to Tyresö. That's another example. Sustainability, we up until 2021, I think we have done a lot of good work on sustainability. We have reduced CO2 emission with some 40% over the last couple of years, and also increased energy efficiency with 17% and migrated over to more renewable energy sources. We presented a new sustainability strategy April last year. I would say it's more of the same, but with higher ambition. I think the residential arm of what we do is sort of also adding a little bit more of social responsibility. I think also the fact that we are now doing more projects puts more sort of pressure on us on the CO2 emission. Within reducing CO2 emission, obviously project development is actually quite sort of, it leaks a lot of CO2. So that is what we've added, basically, and generally higher ambition. Some financial data points.
Yes. Some highlights from our Q4 report. As I mentioned before, substantial refinancings and increased interest rate hedging gives us a strong financial resilience. And as of Q4, we had 315 million in cash and 560 million in unutilized and available credit facilities. We had during the year a net letting of 40 million, and new lease agreements with an annual rental value of 84 million were signed during the year. And our lease renegotiations led to an increase in rental values of 21%. And our financial targets, as you see, well above our targets the last 2 years. However, value changes in Q4 has negatively affected return on equity and NAV growth. But as you also see, our ICR and equity ratio are still well above target. And our debt funding, our total financing consists of about 70% of secured bank debt. We have limited capital market financing, and new bond is maturing until mid-2024. We have low maturity and interest fixing, and about 80% of our interest-bearing debt is hedged, mainly with interest caps. And our shareholders, our 3 largest shareholders, EQT, Altera, and Länsförsäkringar, they have together about 60% of the capital and 78% of the votes. And they have been long-term or main shareholders for a long time, and no material changes during the last 12 months, except Länsförsäkringar. They have decreased the share of capital from about 17% to about 10%. And our assessed earnings capacity as of 1st of January 2023 and the next 12 months gives us an NOI of 645 million.
Thank you.
Perfect. Thank you for that. I guess it's time for some questions. First off, you acquired, as you mentioned, some properties in Denmark and Finland and Norway. What would you say is the biggest differences in terms of transactions and also managing those properties versus Sweden?
Well, it's the same asset class in the same kind of location, and so it's not a big difference as such. But we did choose to buy fully let properties with long leases, where a lot of sort of the property responsibility, the asset management lies within the tenant. So they are, to that extent, asset management light. But that's obviously choice, because it's easier to make an entry into the market buying that kind of properties. It's first upon when you have reached a critical mass, whatever that is, 10 properties, 10 plus properties, where you can build your own organization. So for that particular reason, we did choose to buy asset management light properties with long leases. Tenant assumes a lot of responsibility, and fully let. Yeah.
And what would you say is the biggest why you have grown faster in Denmark versus Norway, for example?
It's I think coincidence, really. Sometimes some markets are more competitive, and they are slightly different. It's as anybody who have done business in Norway know that it's a little bit faster there. They're a little bit more trigger happy. So it's for that reason it's been a little bit more difficult to buy there. Finland is Euroland, so for that reason, I guess the competition may be slightly higher there in comparison to Denmark, even though obviously the currency is pegged. But anyhow, but I think it's more coincidence, really.
Mm-hmm. And then you've shown some slide where you have the tenant structure, and since the IPO we had Coop at the top at around 10% of rental income. When does that lease mature, and also what do you intend to do with that property? after they move out?
The lease matures end September 2024. That's next year, obviously. So, and what we intend to do, I have a slide on it because I thought you would ask. So it's for the audience then, it's our largest property. It's 140,000 square meters. So it's a huge property. And the rent is fairly low per square meters, but it represents 10% of our lease income, and it's almost well, it's not rectangular. It's like a square, I think you call it, with loading docks around basically. So it's fairly easy to divide into different units. And we are now since we just signed the new lease with Coop, let's say half a year ago, which also meant that we knew when we would it would come back to us and we would take it into our possession. We didn't want to market it before. We knew when we could actually take control of it. So we just started marketing this, and I think the appetite from tenants is better than I expected. It's quite good. And we are looking into how to divide it into different areas. I mean, in the perfect world, we would like to let it obviously to one tenant, but that we would find a tenant who needs 140,000 square meters end of next year. It's nothing you can bet on. So for the purpose of flexibility, we are looking into how we can divide it in different ways. I think obviously it's easier to let smaller units, but it's also cost driving to rebuild to multi-tenant and smaller units. The more we work on it, the difference per square meter, so to say, on how you divide it, reduces, which means it's not a big difference between those two alternatives. However, the rent is higher if we divide it up to, let's say, eight units. It's still fairly large units. We talk about 10,000 to 20,000 square meters on the alternative to the right. But we have sort of a strategy with it, how we're going to take it to the market, and we have also a flexible strategy in the sense that we can offer a lot of different alternatives to future tenants, as you see here.
Very interesting. Thank you for that. And I think we are running out of time. So Thank you, Eric and Per-Henrik, for the presentation.
Thank you very much.
Next up is Trianon. Välkommen tillbaka. Jag heter fortfarande Marcus Henriksson och jobbar på ABG. Nästa upp är Trianon, ett fastighetsbolag med fokus på bostadsfastigheter, men även till viss del kommersiellt nere i Skåne. Och med mig har vi Olof Andersson, vd och grundare av Trianon. Ordet är ditt.
Tack för det. Och välkomna till presentationen av vårt bolag Trianon. Jag heter Olof Andersson och jag är vd i bolaget och har varit så sedan 2006 när jag förvärvade bolaget. Den vill tyvärr inte. Så. Vi är ett lokalt fastighetsbolag. Vi äger, förvaltar, utvecklar och bygger fastigheter i Malmö och angränsande kommuner. Och vi ska genom engagemang, nytänk och långsiktighet verka för en hållbar stadsutveckling. Och vi har när jag förvärvade bolaget 2006 så hade vi ett fastighetsvärde på 200 miljoner och idag har vi ett fastighetsvärde på nästan 13 miljarder. Och det består av bostäder till 73%. Vi har 5 000 lägenheter. Vi har samhällsfastigheter till 12% och vi har kommersiella fastigheter med mycket bostadsnära handel med starka hyresgäster till 15% av fastighetsvärdet. Och vi har sedan 2017 ett noterat bolag, först på First North och sedan 2020 på Midcap. Malmö. Det är basen för vår verksamhet och har varit i många år. Och Malmö har vuxit 34 år i rad och är 357 000 invånare. Vi är den snabbaste växande storstaden i Sverige och en del av Öresundsregionen med 4,1 miljoner invånare. Vi har en väldigt ung befolkning i Malmö. 48% av invånarna är under 35 år. Och vi är också en global stad. Det finns 189 nationaliteter i världen. 184 av dem bor i Malmö. Så vi är en ung global stad och det är så att 57% av Malmöborna har på ett eller annat sätt utländsk bakgrund med en förälder som har utländsk bakgrund. Så att vi har utmaningar också i staden. Vi har en hög arbetslöshet, högre än riksgenomsnittet. Vi har lägre inkomster än riksgenomsnittet. Vi är bara 85% av inkomsten förklaras delvis av att vi har en ung befolkning. Och staden planerar för fortsatt tillväxt. Malmö planerar för att bli 500 000 invånare 2047. Och det innebär att bara på bostadssegmentet kommer det behövas 80 000 nya bostäder i Malmö fram till dess. Så det är goda förutsättningar för vårt bolag att växa vidare lokalt i Malmö. Ger vi oss in på 2022 års händelser. Det var ett lönsamt år i ny tid och vi hade en väldigt stark nettouthyrning. 21,4 miljoner hyrde vi ut nya avtal för under fjolåret. Vi fortsatte öka både hyresintäkter och driftnetto och vi gjorde ett antal större affärer på byggrätter. Vi sålde byggrätter både till Tornet och Riksbryggen och fick betalt i nivå med vad vi har, hur marknaden såg ut redan för ett år sedan. Och vi sålde projekt på forward funding. Vi sålde bland annat ett stort projekt i Malmö som vi har börjat bygga nu för 50 000 kronor kvadratmetern. Och vi har omfinansierat 4,6 miljarder. Och vi har gjort under fjolåret med stort sett oförändrade marginaler hos bankerna. Och vi har gett ut en hybridobligation. 4:e kvartalet lyckas vi finansiera om och lösa tillbaka en hybridobligation. Vi har hållbar hybridobligation och ger ut en ny på 500 miljoner. Också detta på oförändrade marginaler. Och sen har vi ju tjänat 114 miljoner på våra projekt. Vi har ett av våra mål är att vi ska tjäna 100 miljoner om året på vår projektportfölj och där levererar vi 114 miljoner i fjol. Om vi då går in på 4:e kvartalet så hade vi hyresintäkter på 174 miljoner. Det är en ökning med 9%. Ett driftnetto på 106 miljoner, ökning med 5%. Och sen har vi förvaltningsresultatet som minskade med 45% och till 35 miljoner. Och det beror på ökade räntekostnader och energikostnader. Och periodens resultat var minus 310 miljoner och det beror på nedskrivning av fastigheter. Vi skrev ner våra bostadsfastigheter med ungefär 3% med lite över 400 miljoner. Så vi hade en negativ avkastning på eget kapital under kvartalet. Men hela året var lönsamt och det näst bästa året i bolagets historia. Där vi ökar hyresintäkterna med 11% och driftnettot med 11%. Och vi minskar i och för sig förvaltningsresultatet med 8% på helår. Men det är ändå det näst bästa förvaltningsresultatet i bolagets historia. Och vi har ett väldigt starkt kassaflöde på 2,14 per aktie. Och ett resultat på 84 öre per aktie. Och det var trots de nedskrivningar vi gjorde på våra fastigheter så gjorde vi ett positivt resultat på 171 miljoner. Och sen ska det ju noteras att vi skrev ner fastigheter här med 400 miljoner. Men 2021 så värderades fastigheterna upp med 1,3 miljarder. Så att vi tycker ändå, och vi känner oss väldigt komfortabla med våra värderingar för vi kan inte förvärva fastigheter i Malmö på de nivåerna, på de gilderna vi har i böckerna nu. Våra finansiella mål. Vi ska öka vårt förvaltningsresultat med 12%. Det är utmanande nu i det korta perspektivet här med de ökade räntekostnaderna. Men i fjol hade vi 13%, i år 8%. Vi ska över en konjunkturcykel leverera 12% i avkastning på eget kapital. Då levererar vi 31% i fjol, 2021, eller i förfjol blir det, och 2022 blir det 3%. Belåningsgraden ska vara högst 60%, där ligger vi på 54,6% och det känner vi oss väldigt komfortabla med eftersom vi har en så stor andel bostäder i vår portfölj. Och sen är det räntetäckningsgraden och det är det som är utmanande för oss just nu. Vi har ett finansiellt mål på att vi ska klara räntorna 1,75 gånger. Och där ligger vi på 2,4 men om vi tar isolerat kvartalet så blir det 1,6. Så att det är stort fokus i bolaget på att få upp avkastningen, få upp hyrorna helt enkelt så att vi kan tåla lite högre räntor. Och sen har vi vinsten från våra projekt som blir 114 miljoner. Balansräkningen. Vi har fastighetsvärde på 12,9 miljarder, en ökning med 2%. Ett långsiktigt substansvärde på 5,7 miljarder. Och då har vi dratt av hybridkapitalet 500 miljoner. Och per aktie motsvarar det 36,38. Och LTV är 54,6 och soliditeten 38,9. Vår kapitalbindning har vi på 3,2 år. Och de förfall vi har i år är till största delen, förutom 400 miljoner, är bankfinansiering. Vi har en obligation utstående som förfaller i augusti månad och den har vi redan bekräftade krediter på i bankerna. Och efter det kommer vi inte ha några obligationer mer än en hybridobligation. Och den hybridobligationen har vi som 4 av 3 huvudägare 65% i. Så vi är bankfinansierade till absolut största delen här efter augusti månad. Och när det gäller räntan så hade vi en snittränta under 2022 på 2,2%. Och där kommer vi att påverkas av de ökade räntekostnaderna. Det kommer att slå vårt resultat nästa år. Ju mer Stibor går upp, ju mer slår det resultatet. För vi har väldigt liten räntebindning i bolaget. För vi tog hem alla våra swappar i fjol och har pengarna i kassan istället. Vi tog hem vinsterna. Vår intjäningsförmåga. Så har vi ett hyresvärde på 798 miljoner och ett driftnetto på 538. Förvaltningsresultatet här är ju rullande 12 månaders ränta bakåt så att 273 miljoner. Jag har en jämförelse på nästa slide. Men det som är intressant är att vi har ökat sen vi noterade bolaget med i genomsnitt 17% per år har vi ökat hyresvärdet. Driftnettot har vi ökat i genomsnitt med 21% och förvaltningsresultatet med 17%. Nu backar vi lite i förvaltningsresultatet. Det beror på lite högre räntor och energikostnader. Vi ska tillbaka på tillväxtbanan igen. Vi ska bara anpassa oss till de nya förutsättningarna. Och här har ni en beräkning hur räntan slår på bolagets förvaltningsresultat. På 4% ränta så får vi ett förvaltningsresultat enligt intjäningsförmågan på 192 miljoner. Och på 5% betalränta så får vi ett resultat på 122 miljoner. Så att vi klarar av den här anpassningen till lite högre räntor. Våra segment, jag var inne på procentandelarna innan, men här ser ni yielderna. Vårt bostadsbestånd är bokat till 4% direktavkastning. De affärer som gjordes i marknaden i fjol på bostadsfastigheter i Malmö gjordes på 3-3,5% direktavkastning. Och sen har vi våra samhällsfastigheter som är bokade till 4,6% och kommersiella fastigheter till 4,9%. Och vi har en snittyield på 4,23%. Och den har vi jobbat upp från Q3, från 3,86 till 4,23. Och det är bara ungefär 10 punkter av det som beror på nedskrivning av fastigheter. Utan absoluta merparten är ökade hyresintäkter. Vi ökar våra hyresintäkter här vid årsskiftet med 45 miljoner på grund av nya avtal och givetvis index och förhandling med Hyresgästföreningen. Och vi får väldigt ofta frågan här nu med ett sådant stort bostadsbestånd, hur kan vi kompensera oss för inflationen? Och vi fick 5%, förhandlade fram 5% i hyreshöjning här nu den 1 januari. Och vi har möjlighet att påkalla till en ny förhandling per den 1 juli vid halvårsskiftet om vi väljer att göra det. Men vi tittar historiskt hur det har utvecklats med hyrorna i Malmö. Så har vi på 23 år sedan 1999 fått 50% i hyreshöjning på bostadsbeståndet i Malmö. Och KPI har under samma tid varit 33%. Och tar vi de senaste 10 åren så har vi fått hyreshöjningar på 16% och KPI har varit 13%. Så vi känner oss komfortabla med att vi över tid blir kompenserade för inflationen i hyrorna. Och vi tror ju att vi har inga marknadshyror, vi har reglerade hyror på i stort sett hela vårt bestånd. Och det innebär ju att en höjning på 5% den har vi långsiktigt kvar på bostadssegmentet. Men på det kommersiella segmentet där vi fick 10,9%, ja det har vi nu. Men det är inte helt givet att det kommer att vara en marknadshyra över tid. För det är andra faktorer som sätter marknadshyran än KPI-höjningen här vid årsskiftet. Vi har ett antal JV, joint ventures, och bland annat 2 stora. Det är Rosengård Centrum och Burlöf Center. Rosengård Centrum köpte vi 2016. Och hur många av er känner till Rosengård? Ja, rätt många. Hur många har varit där? Det var någon där borta, ja. Ja, Rosengård ligger väldigt centralt i Malmö. I Malmö har vi inte miljonprogramsområdena långt utanför städerna utan Rosengård ligger mitt i stan nästan. 7 minuter från centrala Malmö med cykel. Och detta är ett köpcentrum som vi köpte 2016 på 32 000 kvadratmeter med väldigt mycket vakanser som vi nu har renoverat upp och hyrt ut. Vi har byggt ett nytt bibliotek, det bäst besökta stadsdelsbibliotek i Malmö. Och 2021 sålde vi 50% av fastigheten till Bonnier Fastigheter. Så nu äger vi det här tillsammans och ska ta och fortsätta den här utvecklingen tillsammans och bygga nya bostäder där vi har möjlighet att bygga. Vi har en detaljplan på 150 bostäder som är klar och vi kommer ha möjlighet till ytterligare 500-600 bostäder med förtätning på vår mark runt centrumet. Och vi har fullt uthyrt. Det är det enda köpcentrum i Malmö som är fullt uthyrt. Det är inte en enda kedja utan det är bara lokala entreprenörer som driver verksamheter och samhällsservice. Burlöf Center, det är vårt andra stora stadsutvecklingsprojekt som vi äger tillsammans med Balfast i Stockholm. Där vi har 40 000 kvadratmeter handelsyta. Vi har möjlighet till förtätning upp mot 1000 bostäder runt centrumet. Och detta på en plats där det kommer en ny station 2023 med ett tåg var 10:e minut. Det tar 5 minuter in till centrala Malmö, det tar 7 minuter till Lund. De här 2 stadsutvecklingsprojekten kommer att skapa mycket värden för Trianon framöver. Och vi har en intjäningsförmåga också på våra JV. Och det är väl några siffror som kan vara intressanta här. Om vi tittar på hyresintäkterna så har de ökat på ett år från 116 till 139 miljoner. Det är 23 miljoner upp på ett år. Och vi har ökat vårt förvaltningsresultat med 20% i de här fastigheterna. De andra givarna här är BRF-projekt som vi äger tillsammans med andra utvecklare. Sen har vi en stor projektportfölj både i JV och i Trianon. Och vi har 700 lägenheter i produktion som vi har handlat upp till fasta priser. En del av det kommer färdigställas under 2023 och första kvartalet 2024. Och en del har vi sålt på forward funding. Vi ska leverera en vinst från vår projektportfölj på 100 miljoner kronor om året. Och just nu så byggstartar vi inte några nya projekt för byggkostnaderna är för höga. Så vi väntar helt enkelt till det blir billigare och då kör vi igång igen. Och vi har väldigt mycket byggrätter och vi har många detaljplaner igång som också kommer att ge mer byggrätter framöver. Och alla våra byggrätter är bokade till väldigt låga värden i balansräkningen. Hållbarhet. Vi har jobbat ute i våra områden med hållbarhet, sociala hållbarheten och den ekologiska hållbarheten i väldigt många år. Vi förvärvade ett bostadsområde, ett miljonprogramsområde 2011 som vi har rustat upp och där vi har jobbat med jobbskapande. Vi har 13 medarbetare i Trianon som bor i de här områdena och som jobbar hos oss varje dag. Och nu kör vi vidare och tar med den förvaltningsmodellen till andra områden. Och nu kopplar vi det också till vår finansiering. Vi gjorde en hållbarhetslänkad finansiering med Handelsbanken här på 1,9 miljarder i fjol. Och då är det vissa KPI och då är det ju tryggheten i områdena. Om vi engagerar våra hyresgäster, vi har ett nytt projekt där vi anställer boende tillsammans med Arbetsförmedlingen och ska skapa trygghet i områdena och vi följer upp det här. Och det ger oss lägre ränta om vi levererar på de här KPI-erna. Men också att vi har en tillgänglig bostadsmarknad. Att vi inte ställer för höga inkomstkrav på våra hyresgäster så att man har möjlighet att bo hos oss. Och att vi i alla våra hus jobbar vi med energieffektivisering för att få ner energikostnaderna. Och det är här vi kan påverka miljön absolut mest eftersom 40% av alla CO2-utsläpp kommer från våra fastigheter. Och sen satsar vi också mycket på solceller i våra hus för att få lägre elkostnader och det är väldigt lönsamt. Så att det gör vi i takt med att vi renoverar upp våra hus och sätter vi solceller på taken. Och det är också kopplat till vår finansiering. Sen har vi en hållbar hybrid. Det är också hållbarhetslänkade insatser vi ska göra ute i våra områden. Och sen så har vi en stiftelse tillsammans med det kommunala bolaget i Malmö, MKB, som heter Momentum. Där vi har satsat 21 miljoner från Trianon, 21 miljoner från MKB som ska främja ungdomars fritidssysselsättning ute i de områdena som har lite utmaningar i Malmö. Så, efter periodens utgång så har vi rivstartat 2023 med ett antal stora uthyrningar. Så vi kommer ha nya intäkter både på entré och på Värnhem och det kommer att komma mera. Vi ser ingen avmattning på uthyrningen överhuvudtaget. Vi fick hyreshöjningen som jag nämnde på 5% här den 1 januari. Och vi har finansierat om vår utstående obligation i bank som kommer att ta över den finansieringen i augusti månad. Och sen nämnde jag det tidigare, vi ökar här nu våra hyresintäkter med 45 miljoner den 1 januari med på grund av KPI, hyreshöjningar och nya avtal. Så vår affärsplan ligger fast. Vi har stort fokus på att få upp direktavkastningen som är på 4,23 på våra fastigheter. Få upp den ytterligare. Och det ska vi göra genom uthyrningen. Nya avtal. Vi har vakanser i Trianon på ungefär 28 miljoner. Vi har vakanser i våra JV på ungefär 20 miljoner. Hur vi ut det är nya intäkter. Vi investerar i våra befintliga fastigheter, i energieffektivisering, vi renoverar lägenheter, höjer hyrorna och skapar värden. Nyproduktionen var jag inne på. Det är de fastigheterna kommer bidra med nya intäkter redan 2023 och början på 2024 vid produktionsstartar när vi får rätt pris så vi kan göra bra affärer. Och transaktioner i syfte för att få upp snittgilden. Vi utvärderar det som blir till salu i vår region. Så vi har staying power i Trianon. Vi har en stark finansiell ställning. Vi är ett dedikerat team. Stort engagemang. Jobbar hela dagen. Och vi är i en region med hög tillväxt. Så vi anser vi är på rätt plats i rätt segment. Har stort fokus för närvarande på att få upp avkastningen på våra fastigheter, anpassa bolaget till den nya verkligheten vi är i nu och därefter fortsätta vår tillväxtresa. Tack för det.
Bra, tack så mycket. Lite frågor från mitt håll. Vi har några minuter. Ni har 5 finansiella mål och som du lyfter fram så nådde ni 3 av dem.
Yep.
Under året. Hur ser du på möjlig måluppfyllnad här under 2023?
Ja, men 2023 får vi anpassa bolaget till de nya förutsättningarna. Så att tillväxt i hyresintäkter och driftnetto kommer vi nog att klara, men vi klarar inte. Det är utmanande att klara tillväxtmålet i förvaltningsresultatet.
Mm. Och hur ser du på om man säger, målet i förvaltningsresultat? Såklart över tid så vill man växa bolaget, men det här är också något som ni på kort sikt kan hantera via antingen förvärv eller avyttringar. Hur ser man på det under 2023?
Styrelsen tog beslut på att trots vår starka finansiella ställning återkomma innan vår årsstämma med förslag på utdelning. Och det är ju för att vi ska kunna ha en flexibilitet och utvärdera olika affärsmöjligheter här fram till dess.
Ja, det låter fullt rimligt att man ändå öppnar upp för den flexibiliteten. Du nämnde lite möjligheter. Vad ser och hör du på transaktionsmarknaden för bostäder eller för kommersiella fastigheter i era områden där ni verkar?
Ja, alltså, man kan ju säga att transaktionsmarknaden, säljare och köpare har inte riktigt mötts än. Det som är ute i marknaden på bostäder i Malmö har ju sålts för 3-3,5%, men det har ju inte varit väldigt mycket transaktioner å andra sidan. Och i övrigt så jag tror det kommer igång här nu.
Mm. Är det att du ser det från mäklare eller är det mer en magkänsla?
Nej, men vi är ju rätt så nära marknaden i Malmö så att där får vi ju reda på vad som är på gång.
Just det. Sen du lyfter fram räntetäckningsgrad, det är ett annat mål som ni har. Och det kikade ner på 1,6 gånger 2,4 som du lyfter fram för helåret. Det är en del andra fastighetsbolag som har jobbat med derivat. Ni realiserade ju er portfölj under 2022. Hur ser ni på den strategin under 2023? Att man säkrar upp en miniminivå på räntetäckningsgrad?
Ja, men vi följer ju det här och det är klart att vi ska ha swappar och derivat i enlighet med vår finanspolicy här och det ska vi ju bygga upp igen. Men vi konstaterade när vi stod där i höstas och räknade på det här så var det ju en bättre affär att ta hem vinsterna på 145 miljoner på vår swap-portfölj då. Hittills har det varit rätt, men det vet vi inte.
Nej, enig. En fråga kring, du lyfter fram fortsatta hyresökningar i bostadsbeståndet. Där har kommit en ny överenskommelse under 2022 där man tittar på kostnader under flera år för att ta hänsyn till hur mycket hyran kan förhandlas upp i bostadsbeståndet. Nu blir det ungefär 5% för 2023. Vad är din bild för 2024 eller till och med om man vågar blicka in i 2025? Kommer man ta hänsyn till de högre kostnaderna som var under 2022 även nästkommande år?
Det gjordes ju en överenskommelse mellan Hyresgästföreningen, Fastighetsägarföreningen och SABO, den här trepartsöverenskommelsen. Och den var ju i grunden väldigt bra. Och den har ju också blivit ett lagförslag och det innebär ju att vi som fastighetsägare kommer vi inte överens om hyran och inte kan fastställa viktningarna i de här parametrarna, för det är där vi inte har kommit fram än. Så har vi möjlighet att frånträda förhandlingen och då utser hyresnämnden någon som en skiljeman eller kvinna som sätter hyran. Och det här var väldigt bra. Nu blev det en exceptionell situation med den höga inflationen och vi hittade inte viktningarna. Jag hoppas att parterna ska hitta de här viktningarna så att vi kan lösa det här och förhandla till nästa år. Och den förhandlingen som gjordes här nu, där har inte den överenskommelsen legat till grund för.
Bra svar. Jag tror vi avslutar och tackar Olof Andersson och Trianon för en bra presentation. Tack så mycket.
Tack så mycket.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have a company called Freemelt, which is one I cover. And presenting for us today will be Daniel Idlund, the CEO of Freemelt, and Ulrik Ljungblad, the CIO of Freemelt. Please take it away.
Okay, thank you, Henrik. So, welcome to Freemelt. Freemelt is a deep tech and a green tech company, and we will take you through for the next 20 minutes. So, if we start with the type of 3D printing that we are in, we're in metal 3D printing. And we are in powder bed fusion, and Ulrik will come back a bit later on that as well. The business potential only for this type of technology is for the next couple of years around 30 billion SEK. So at 2026, it's expected to be around 30 billion. It will be a good growth over the next couple of years as well. We have a CAGR of roughly 28%. 3D printing as such, I think maybe most of you think about prototyping, and that has been the focus as well for 3D printing for quite some time. But now the technology and also the customer is more mature, so now we go more into a production focus. And if we also continue the other kind of benefits when it comes to 3D printing, that's of course about also that, you know, here we can produce new and more complex components that you cannot do with other kind of technology. We can also develop new type of materials and composition of materials that is also impossible through other technologies as well. So in a nutshell, what 3D printing brings, I mean, that's we get better products, we get lighter products, less waste of the products, and also stronger products than made in traditional ways. And then I think also the last point is also quite important, and especially I think during when we have seen supply constraints around the world as well, you can also build a much more efficient manufacturing footprint as well, and to really produce your products much closer to the end user as well, which means that you reduce cost for freight and transportation, time, and of course also the CO2 emission as well. Freemelt started in 2017, and pretty much on the day, I would say 2 years after the company was founded, we delivered the first machine. We are a public listed company on the Nasdaq First North, and had an IPO in 2021. So far, we have raised 188 million through issues of shares, and we have currently 35 employees, mainly in Sweden and mainly in Gothenburg, where we have the headquarters. We have, except for Gothenburg, we're in Linköping as well, where we have the production site, and we have a sales office in Germany, and actually starting up one in the US as we speak. 2022 was really the breakthrough from a commercial perspective, I would say. We had 8 new orders last year, and we delivered 9 machines. And even within the short time period, we have actually sold 19 systems year to date. And this have actually taken us to the number 2 position globally in this specific type of technology. We have been when we presented Freemelt to investors, a lot of them has mentioned about Arcam. Arcam was a great success in Sweden from 97 on up to 2016 when GE acquired them. So that's why we also have a peer benchmark just to see how their development were versus Freemelt. So on the green line, you can see the start in 2017 of Freemelt and 97 for Arcam. And if I put it at the year of the hockey stick when it really took off sales-wise was last year for us, so year 6, and for Arcam is pretty much in year 10. Ulrik.
Yes, so I will talk a bit about our technology that we use in the systems that we produce. So it's electron beam powder bed fusion, which is the best suitable technology within the 3D printing field, in our view, on when it comes to productivity. A lot of that has to do with the high beam power that we use for printing. So we focus on applications that are suitable for this technology, and it differs quite a lot from our other competitors within this field in the way that we use technology that works at a very highly elevated temperature for the workpiece that we produce. So it's for some materials, it's up to 1,000 degrees centigrade and even further. That means that we can do things when it comes to materials in the technology that can't be done any other way. So we can tailor material properties in that way. It's also especially good for bulky parts. And we also focus on small to medium size parts, which is actually the most parts out there in the world that are produced. They are small to medium size, and it's also most suited for this technology. In the build chamber, we use a vacuum technology. So inside the vacuum, it's a harsh environment with evaporation when they melt the powder, and also at high temperature, as we said. So we use a high-resolution electron beam with high beam power, and that enables very high productivity. So we are aiming to compete with traditional manufacturing methods like casting, forging, machining, and so on. And also we use, with electrons, we can move the beam very fast to new positions. And that means that we can also print fast because of that. So we use this technology in our products, and the product that we have on the market is Freemelt ONE. This is a state-of-the-art machine for material development. It's an open source electron beam powder bed fusion system for use in materials development. And we have, as Daniel said, sold this to a number of universities, but also industrial users for material research. The next step for us is the eMELT system. It's a production system for high volume production. It's an industrial open source electron beam powder bed fusion system. And it's also based on the same core technology as Freemelt ONE. And what's important here is that material processes that are developed in Freemelt ONE can be directly transferred into eMELT. And that cuts a lot of time when it comes to applying this technology for new mass production cases. We also have a software called PixelMelt. So it's specially made for data preparation into our systems and make use of the fact that we can move the beam very quickly from place to place. So we can actually reposition the beam for melting in more than tens of thousands of places every second. That is very different from all our competitors, and it enables new materials and new ways of producing parts in an efficient way. We have also adopted from the start open source strategy, where we enable our customers to use the technology fully by allowing them access to the software itself. That means that they are also able to create their own IP, which is a big advantage for our customers.
My background is actually, it's a commercial background, but also I spent my whole career within aftermarket. So that's also why aftermarket now, we are bringing that as really close to our strategy as well. I've seen the value both from a customer side, I mean the value that you can bring, but of course also when you're building a sustainable, profitable business as well, it's absolutely crucial. So we definitely take that into consideration now as well. And of course, this will also reduce our transaction exposure, from a price perspective, and we can focus more on the value side of it. We're just starting now, and this is especially for the industrial machine, not so much or as much for the research machine, but mainly for the industry, which of course it's crucial to have a machine up and running and producing. So we're defining a life cycle strategy as we speak, and now eMELT, which we are finalizing the development of. Here it's crucial also to design also that machine from an aftermarket perspective. Digitalization, I think all of you have heard about. The data is, of course, very important, and it's a huge value when you can start to interpret data and translate it into values for the customers from a uptime perspective, from a productivity point of view. So this is why we foresee as well to have reliability centers 24/7. Supporting our customers as well. And in the end, the kind of conversations we have with some of our industrial partners is that instead of buying a system, they are asking also if it's possible to buy like a performance contract as well. So that's also something that we are considering as well moving forward. We have defined 4 business verticals and 3 core materials that we're working with. The first one, which is about research, here is independent on materials. So this is the customer can really work with any kind of materials. This is a big business vertical. We talk a lot about the industrial side, but actually this one is really big. We have 30,000 universities, and AM Power, which is a consultancy firm, their estimation is that there will be 900 new machines in this type of technology we're talking about that will be sold by 2026. And here, as Ulrik mentioned, I mean, open source is a critical decision point for those customers. If we go then to the right side of the slide here, then titanium is one of the prioritized materials, and we have defined pretty much implants as the application that we're going to focus on. It's also a lot of based on the history that Ulrik and the team has here as well. And I would claim that this application is one of the more mature also. And then maybe 4% seems a bit low, but the point is that so 4% is the current ratio of all the produced plants in the industry. But you can see it's an expectation now to start to grow substantially up to 20%. And here, AM Power expect it to be roughly 700 new machines sold for this application by 2026. And to make sure now that we develop a product that also the market expect, we work closely with a few industrial partners in this specific application to make sure that the email meet the expectations as well. The third or the second one material is tungsten. Tungsten has literally exploded, I would say, in regards to interest over the last couple of months. Fusion, for instance, is one of the applications. MedTech is another, and we put other as well because it's popping up new applications in tungsten on a regular basis. We just took one example here to show you about the potential of this market potential, and this is for fusion. So this is what Commonwealth Fusion System claim as their vision, that by 2050, 20% of the world energy production should be through fusion. And if that is the case, then it would be in need of tens of thousands of printers. And why? Because this is how one of the reactor design looks like, and the whole encapsulation of the reactor is in tungsten, because that's pretty much the only material that can stand the high temperatures within the reactor. And so even for research perspective, I mean, it's still a huge business potential in that segment. And same kind of thing here as well. We work closely with industrial partners on this as well. Then on the, and I should say as well, it's roughly 50,000 to 100,000 parts inside, so it's a lot of them. And of course, this is a consumable, so you need to replace this on a regular basis. On copper, which is our fourth focus material, here it's mainly in electromobility and mainly in connectivity. And here our technology also is highly beneficial because it's in vacuum, which is perfect for high purity parts as well.
Okay, and so this slide is about our competition and the landscape of producers of systems for electron beam powered bed fusion. But first to the left is an assessment by this market investigation company, AM Power, on all the different additive manufacturing technologies, how mature they are for metal manufacturing. And as you can see, laser powered bed fusion is way in the lead. It's widespread industrial use. There's a lot of printers sold. But actually, electron beam powered bed fusion is in the industrial sector already. And of course, we aim to bring this up to where laser powered bed fusion is by implementing this in the different material verticals that we saw on the previous slide. And from our competitors on the right, General Electric that bought Arcam has by far the most installed printers when it comes to electron beam powered bed fusion, used mainly for aerospace application and for implant applications, but also a lot of research. So we are by far number 2 in this. We have now installed 17 systems, 9 last year. So we are way ahead of the other competitors that are entering into this area, where there are scattered sales with some of these upcoming competitors to us, but we are far in the lead.
And the positive is that it also increases from a competition side on a regular basis now, which I think is good for the industry as such. If we zoom in on financials, and last year, as I mentioned before, was a really good year. It was a record year in sales. We had net sales of 36 million. We had 8 orders and 9 systems delivered. We have a very strong sales penetration in US. US is a very important market when it comes to research. US as such is investing heavily in research, and actually a lot connected to the materials that we are focused on as well. We also launched our industrial machine eMELT, which of course was a key milestone for us. Now the aim is really to get into production at a few customer sites by end of this year as well. And then maybe just to highlight, I think people is of course important when you are doing business, and we managed to get Dr. Johannes Schleifenbaum into as a board member, and he's a professor at Aachen University, which is really the mecca for 3D printing as well. Our focus now forward here, we just announced in February about UK AEA. That has reached out to us to get the help to develop 3D printed parts in tungsten for development of fusion reactors. And of course, I mean, when we feel very proud when someone from authority in the UK is reaching out to a small company in Sweden in Gothenburg. But I think it tells about we have a good reputation in material process development. We also just finalized an issue of shares of 66 million, which makes us now really to step up in the eMELT development and complete that industrialization part. We are continue to ramp up in sales and service. I mean, the research machine that we have in place, and we have a good traction now in North America and Europe. We need to invest in more resources so we can grow organically as well. We also now slightly changed the structure of the organization to become, quicker, more agile, and be closer to our customers. So we will have a regional execution structure, and we're starting with North America as of this week. We'll go to EMEA and then APAC as well. And then our long-term view and ambition is that we would like to become the number 1 in this specific area for the decided applications of tungsten, implants, and copper and research as well. So from our perspective, I think we think it's a perfect opportunity now where we are. We have a good product. We have a good traction on the research side. It's still a huge growth in this industry. And the other part as well, that we also do only business in high value verticals. So it's not the price sensitive kind of business vertical. Together with our focus on aftermarket, I think we will also try to make sure to maintain the good profitability and margins moving forward as well. And yeah, as we Ulrik mentioned as well, the position we have now to really scale up and to have a high ramp up efficiency, I think the likelihood for that is also very good as well. So that's all from us. Thank you for your attention.
Thank you for that, Daniel and Ulrik. Let's move on to some questions. So 2022 was the year where sales really kicked off in the company. Could you talk a bit about the outlook for 2023?
Sure. I think, as I mentioned before, I mean, US, we had a really good penetration at end of last year. And so far, the type of these customers, mainly universities, they are really keen to get the open source. And also, I mean, so far, customers talk to customers. So I think from a sales acceleration point of view, we expect to really continue to grow a lot in sales for the research. When it comes to eMELT and the industrial machine, that will not take place, as I said, until end of this year. So the main development in sales in this year will be about the research machine, which we are, you know, very positive around as well.
And speaking of the eMELT, could you maybe expand a bit on how you've been working to prepare the market for this machine and how the rollout will look once you are done with development?
Yeah, so we've been, throughout the project, we've been working very close with, like Daniel said, a few partners, a few becoming customers, where they have had the chance to influence the design of the system. And we are also working very close, especially on the material development side, where we now develop material processes for eMELT in our own Freemelt ONE systems. So this we do very integrated with our customers and according to their specifications. But also we are preparing now for the launch of the first systems into these customers as well.
All right. So in a long-term perspective, you talked a bit about more of a service business as well. Could you maybe tell us a bit more about that? What do you think the potential is there? Currently, you're only or mostly selling machines. What do you think the potential is there for a service-based business going forward?
I think it's a very difficult question. I'm not sure if I can give you a clear answer on that one, but from a research perspective, unfortunately, it's not a big business. But when it comes to the industrial machine, and here what we can see, it's in most of the applications, it will be a 24/7 operation where those machines going to be as well. Then, of course, I mean, the importance of aftermarket is crucial. So there I definitely foresee that those customers, and even as Ulrik mentioned, these customers already now start to have that kind of conversation. I mean, instead of buying from a capex point of view, is it possible to buy more from performance type of contracts? If that really goes ahead, then of course, I mean, I would say the biggest portion of our business in the future will actually be on the services side. With that said, I'm coming from a mining industry where it's quite common to have these kind of contracts, supplier customers, and it's also a big risk. So when the technology is new, we will not step into this until I would say a few years when the technology is more mature. We have a better relationship with our customers and so forth. But then for sure we're going to try to go that direction. So.
Interesting. You mentioned this contract with the United Kingdom Energy Authority or something, which is sort of a research contract. Is that something you plan to do more of, or how did that happen?
For sure. I think maybe you would like to answer, Ulrik.
Yes, I could answer that. It's so it's a research contract. They are paying us to develop tungsten towards their needs. So there's a lot of requirements when it comes to using tungsten in fusion. It's not only the heat resistance; it's also radiation resistance. It's about lifetime because it is, like you say, consumable. So a lot of material properties are very important there. So this is a research project that we have sold to them and that we will deliver on. But yes, we are also going to do this going forward in other areas in our main verticals. So in the implant side, on the different fusion applications, but also on copper.
And also I can just add as well, of course, this type of focus is not just in the UK. I mean, I think all continents are spending a lot of investment in this area. So if we are successful here, I'm pretty sure we will get hopefully interest from other countries moving forward as well.
Thank you very much for that. I think that's all we have time for today. Thank you all for listening.
Thank you.
Thank you.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kranowski, and I'm an equity research analyst here at ABG. With us today, we have Claes Zetterman, CEO of T-Secure. He will present to us his company today, and then we will have an opportunity for a Q&A. And with those words, I leave the floor to you, Claes.
Thank you very much, Nicholas. Hello, everyone. Good to see you here. I'm going to talk a little bit about T-Secure, which is a fast-growing, entrepreneur-driven group of security companies. And we emphasize a lot delivering safety and security to citizens and society. We work with smart digital solutions all the way from design to implementation and service. And we have a unique portfolio, as you can see, of three segments here: national security systems, secure communication, and advanced globally security systems. Meaning that this is a unique mix, which I think we're alone about having. And in each of these areas, we have a long history of working with large corporates and large public institutions in these different fields. We also have a high share of recurring revenues through long-term contracts with our customers, both for service but also license fees and maintenance. Today we are 10 companies, 10 portfolio companies, and around a little over 200 employees. If we start taking a look at the market, we see that the security market is growing very fast. This is the last projections for the coming 5 years. We estimate a global market growth of around 10%. And the driving force behind that is the strong demand for physical security in authorities, companies, and for individuals. Some market segments, though, are growing a lot faster than these 10%. For example, VMS, video management systems. That's how you integrate if you have large installations of, in some cases, over thousands of cameras to see what's going on, what's happening. Can you connect some pattern? Can you see some individuals, etc., before something that shouldn't happen happens. The other thing is that there is a trend towards digitalization and smart technology solutions. And these are some examples that we work with all of them. It's either wireless solutions. We do a lot through the cloud these days, following the strict cybersecurity protocols, of course, and advanced integrations. These can include control rooms for example, for authorities and also for companies where you can have a good view and picture of what's going on in your systems. Camera surveillance I mentioned, and then last but not least, and I will mention a little bit further in the presentation, it's what we call alarm portals, which is basically a way of collecting information in your systems on an ongoing basis. And this is, for some clients, very complicated, because if you have, let's say, 300 or 400 properties, real estate, buildings that you have to manage, you have to allow temporary access, you have to do maintenance, you of course have to be ready if something happens, if there's a fire or if there's an intrusion. So it's very important to be able to manage that. And as we go through this digitalization of the security market, we also see that digitalization is becoming a very large part of it. And it creates special demands for managing this. And then we have the area of secure communication, and this is also growing fast. Traditionally, secure communication has been radio communication that are used by the authorities, if you have the police or the fire brigade or ambulances, etc. But today you also need it in essentially all municipal buildings and facilities, and you need to have good communication indoor as well as outdoor. So what we see there is a trend that not just voice, but also data communication is becoming more increasingly important. For example, if you have an accident, you need to transmit a patient information about a certain patient, or you need pictures from if there has been an accident or something like this. What we deliver in terms of solutions are, if you look at secure communication, first of all, is, as I said, not just radio, but it's mobile and data communication as well. And here we do customized control rooms. We integrate and we build application, navigation support, GPS support, etc. And we also work quite a lot with underground or an indoor coverage for these type of communication. We, for example, do in Sweden, we do all the big tunnels through Trafikverket, where there's a need for improved communication. And there you need to have the secure communication secured, but also you need obviously the mobile communication, normal radio, and so on to work properly. Physical security, here we have integrated systems as well, access control becoming more digitalized, intrusion detection, fire alarms, and we have this alarm portal that allows, it's a management tool that is unique in the market. Lamport is unique in that sense that it communicates with all alarm senders on the market. Maybe there is one that it doesn't work with, but it can easily be done. And it could actually work also with other type of alarms. If you have a fridge or a freezer alarm in a department store, if you have an elevator, server, and so on. Then we have access control, where we work to the top right with global access for companies. These are global multinational companies that want, similar to having global ERP system, you want to have global control over your security work. And here we build those systems. A lot of them are cloud-based together with our clients. This again is something that's really becoming more and more important. For example, we had a situation during the pandemic where we had a large international client, it's a streaming company, that wanted to close one of his offices in Singapore, and that could basically be done by press of a button here at the headquarters. So that's one example. Camera surveillance, I think anyone can mount a camera. Private, you can buy a camera and put in your house if you want. But if you have, again, a large system of many cameras for a sports arena, for example, where you have basically surveillance through an ongoing game, all these cameras needs to work together, and you need to be able to spot what's happening. So there's quite a lot of IT knowledge behind in making all that happening together. So what we do here, we do anything from design, installation, integration, quite a bit of programming, professional services, system surveillance, 24/7, and maintenance. So if you look at our business, basically, our business model is very simple. It consists of 3 parts. The first one is that we deliver the complete security solution for the clients. We have long-term relationship with most of our clients, a very high degree of recurring revenues and customers coming back time and time again through our professional services. And then the last point, which we also feel is very important, security is based on trust, and we believe that entrepreneurship, working closely with the client, is of essence, despite that we're working with these high technological solutions. We have 3 financial goals, and the first one is to grow 10% organically per year, plus acquisitions. That's an add-on. To reach a 10% EBIT margin, we are getting there step by step. It's a little bit like the high jumper Duplantis. We take one step at a time. If you look at our companies, some companies are already far above 10%. Some companies are not there yet, mainly because they're growing. Some companies doubled their revenues last year, for example. And then, of course, that has a certain price. Short term, we could easily get that up to 10% on the expense of growth. And then we also want to have a balanced risk-taking in our net debt quota of less than 2.5. Our strategies to reach this is, of course, growing. It's easier to grow profit and shareholder value in a growing market. And then we also have a fundamental belief that good companies are run by good people, and that we can always be a better company tomorrow than we are today. So we have a quite high focus together with these companies in improving our operational efficiency. And the last point is acquisitions. We've made 8 acquisitions since our IPO in 2017, and we will continue to do acquisitions. I might add that we are not the typical serial acquirer. We're more of a strategic partner in the fields that we work. And we are really concerned that our companies that we acquire fit well into our group, good collaboration with the other companies, and that they have a strong track record that we can build further on. So here is, if you look at the last years, so we've basically doubled in the last 3 years, or 2.5 since 2020. 2.5 times, and we've seen our profit double 2 years in a row. One thing to highlight here is that our cash flow is very closely linked to our EBITDA. It's not a very capital-intensive business that we are running, so we see a good cash conversion ratio for our businesses. Of course, this can vary month by month and quarter by quarter, but this is a little bit how it looks like in the last 3 years. We stimulate cross-fertilization across our businesses, and that are entrepreneur-driven. And if you look here into the 3 segments, we had RF coverage, the 2 TC Connect units in Sweden and Norway in secure communication. That's the foundation. That was the origin of our group. And we started invest in national security or physical security back in 2017. First acquisition working with global solution is AWT, Access World Technique. And then we have the other companies here with MySec, Lamport, Kungslås, and Automatic, and Sectragon that works in the national security system. We see quite a bit of synergies, both in terms of strategy development and implementation. Common customers, we can help each other out. Some are more specialized in camera installations, some are more into the access control systems, for example. So that's a good possibility. We've also reached now a pretty nice mass in terms of size. So we have an ongoing project in sourcing to get better conditions and working closer with our suppliers. Staffing, if there's excess in some place or need for people in another area, we can have people shift around. It also gives an opportunity to get new experiences within our group. And last but not least, tremendous amount of knowledge transfer. You know, what are the best recipes for running a business in the security market? We can learn a lot from others, which is difficult to do if you're a standalone entrepreneurial driven company. So we enable growth of our companies through the strength of being a group, both financially but also capability-wise, which we are so far seeing big success with. And as I said, initially we're about 200, a little over 200 people today and growing. If you look at our customers, this is just a snapshot. Some of our customers, we can't even tell the name publicly. But if I tell you that we have a global American, large, fast-growing car company as one of our key clients. We have some of the world's most known streaming services as clients globally. You can get a flavor for what type of customers we're working with. Here are some examples. And so we have, of course, the public organizations that are working with secure communication. And then the national security we deliver to both public and private organizations. We have very few private customers. We have a few, but they have a little bit more budget than the average person. So if you want to put in an advanced system into your house. And then on the global scale, as I mentioned, we have global international companies, including investment banks, energy providers, and as I said, high IT and tech companies. So here's an example of Lamport, which is our digital and real estate surveillance solution. And it's kind of amazing that since we started working with this, we have, through our company MySec that developed it initially, it has handled more than 35 million alarm events in different systems for thousands of customers. And it's still growing. And as I said, it's compatible with all the alarm senders on the market. And it means that the information is safely secured and it's easy to manage access, maintenance program. And this client here that you see here, they've been able to save significant time and efforts, and it has helped them tremendously in their work for security. You have to imagine that if you are a municipality or a large organization, managing security is a big thing because there are lots of people involved, all the way from management to project leaders to sub-suppliers to installers, and then of course all the people working in these buildings that need to have access at a certain time, for example. And most of the work in a security system ongoing is not that there is an event of a fire or an intrusion. It's because you need to keep and follow the strict protocol that's dictated more or less by the government for these type of operations. So communication is effective and it reaches the right recipient with the right information at the right time, and it creates also a sustainable way of managing security. I think in this case, they've reduced the number of fixes of their system. They have, I think, between 300 and 400 buildings. They've reduced that significantly, I think, by over 80%, thanks to this Lamport surveillance solution that we have developed. So what are the opportunities ahead? Well, first of all, strong market growth, the increasing need for physical security and safety in the society, and for organizations, for companies, and for individuals. And we see the digitalization. A lot of older systems are getting replaced with the new ones. We experienced strong growth in 2023. We had an organic growth over 20%. and we expect the trend to continue. And we were pleased to see also that the bottom line results also followed our increase in revenue last year. We made 8 profitable acquisitions since IPO, and as I said in the beginning, we have a unique diversified portfolio. You're not just investing into one of these areas. And that's also what differs us if you look at our competitors in the different segments. In some segments, what we do is part of their business, but maybe not the main activity. In other areas, they still have not, let's say, acquired the technical competence and being in the forefront of technical development that's needed to have and be able to deliver creative, I would say, and smart solutions to the customers. We see overall very good prospect for future value creation. We have a high commitment by both management and the board. So I think the ownership is over 40% at the moment. Our market cap has grown to about 450 million SEK, and that's about 6 times higher than 2020. And of course, we also issued some stock of about 100 million in that process, but I think it's still a fair, nice example of value creation. So what you see here on the right is how the stock price has evolved on the NGM SME equity market. Our vision is to be a leading Swedish group in security. Perhaps not the biggest, but definitely leading in terms of the areas where we work, where we have a group of unique portfolio of profitable and specialized technology companies in the security sphere with secure communication. And we are entrepreneur driven. We always emphasize to keep things simple, but we want to have the momentum, the speed of response to the market that it's difficult to get if you're a large corp. The group offers strength and stability at the same time, and then we have this aspect of cross-fertilization that I mentioned. Close and long-term relationships, extremely important. Smart and value-adding solutions built on innovation, state-of-the-art technology. We also developed quite a bit of technologies ourselves in terms of programming, finding new solutions, which I think is something that is to a large benefit, and we'll also see an increasing trend of this going forward. High organic growth plus handpicked acquisitions, and if you look on the right here, you see the split of our business as it was in 2022. So why should you invest in T-Secure? Well, it's secure technology in a fast-growing, and I would say it's a non-cyclic market. We have this specialized group of technology company with a solid track record in these areas and to society's most demanding customers over many years. We have a proven business model with successful acquisition. So we have the best of both worlds, both in terms of organic and acquisition-based growth. High share of recurring revenue, and our target is to grow 10% annually. And as I've said several times throughout the presentation, the market is growing fast, and that's gives us, of course, a structural tailwind looking forward into the future.
All right.
Yeah.
Excellent. Thank you very much for the presentation, Claes. We have a few follow-up questions, if you don't mind. I thought perhaps if we could start with unit economics, just very simply. Could you just walk us through the unit economics of each segment in your business?
Yeah, so we have the 3 segments. So if you start with secure communication, we had over 50% organic growth last year. When the war started, basically all our inventories were sold out back in February or beginning of March of last year. But we also see that trend is continuing, and it's even more work for large organizations with lots of people that needs to be kept secure. And I think the other issue that has popped up, apart from moving into different type of systems and technologies for communication, is also that you need a redundant system. So if something happens, you need to have a way of communicating, and that's been very clear during the last 12 months, I would say. Secure communication is well above our 10% target, so it's a fairly profitable segment for us. If you then look at the national security, we had a pro forma, and I say pro forma because we made in the last 2 years, 2021, 22, so much acquisition that just to look at the organic from the beginning doesn't make sense. But the organic growth was around 20%, and I would say that profit is above average for the whole T-Secure. Global security had an organic growth last year of 8% versus 2020, which is far below actually what we've experienced in the last years. And that's due to some large projects that were delayed from this year. They were supposed to kick in, let's say, in the third quarter. And of course, we had staffed up for that, meaning that growth didn't come through, and also our profit was impacted in this segment. So that's below average, I would say. However, in the last quarter of last year, we saw a tremendous nice rebound. So we got back to growth, and we have, I think, one of the highest order stocks going into this year. So this year for AWT and Global looks a lot stronger. So maybe it was a consolidation year. I mean, AWT and Global Security System, when we bought them in 2017, they had a revenue of 7 million SEK, and I think last year they did, including everything, about 75. So it's been a tremendous growth, tenfold growth, only over a few years. And yeah, so that's a little bit where we are in the different segments to give you a flavor for it.
And if we just look back into 2022, I believe you grew pro forma organically by something like 28%.
Yeah.
Could you just help us unpack this growth? Where did it come from? Was it price increases, volume, or perhaps a combination of both?
Yeah, most of the growth came from volume. There's no doubt about it. If we look back and price increases and inflation in general, it really started to kick in towards the end of 2021. And then we saw it, of course, going up. Everybody got worried in the beginning of 2022, in the first half. And what we saw were price increases from our suppliers. We implemented those proactively to our customers, of course, throughout the first half of the year. But I think price increases at that point were moderate. But we see more an accelerated inflation and increases mainly in the fourth quarter of last year. So I would say that volume stands for about 70% of the revenue increase that we've seen. So still organic growth, excluding price, is still far above our 10% target. So overall, last year was a great year from that perspective.
Yeah, that certainly sounds great. And if we just dig into the segments a little bit, you have 3 segments: national security systems, global security systems, secure communication. When somebody, I guess, reads about the segments, they might find that the third one is a bit odd, I guess. How would you say that it fits into the entire group?
Well, I would say that all segments are odd. None are the same. But if particularly with regards to secure communication, that was where we started. Because the TC Connect business, is the same in T-Secure. The first 2 letters comes from, actually it stands for total communication. But anyway, that was the origin, and there was a decision made back in 2017 to expand into the physical security as well. And the first acquisition we made, which actually AWT, which today is Global Security Systems. There is also a big difference between global and national because they use totally different system. There's some commonalities, but and the needs they serve are more or less the same. So it's intrusion detection, access control, and camera surveillance. So which you find in the national security systems as well. But they work on different standards, more advanced, I would say, for the clients that require simply the best that's out there in the market. Yeah, that try to explain a little bit. But we do see now, because of the environment around us in society, we do see a lot of inquiries, but also projects where we involve both physical security and secure communication. Because of the need, for example, for redundant system. What happens if you're a big corporate and you have 500 people in the head office and the 5G or 4G or whatever network you have in your area goes down? You need still to be communicate, and if there is a fire, there is an emergency situation. That's where you need to be prepared for. So there's quite a bit of overlap, and I think that trend is continuing, especially since secure communication now moving more into digital and data communication as well.
I'm afraid that we're out of time by now, but I would like to thank everyone for listening in, and for everyone watching the live stream, thank you very much for listening.
Thank you.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have the CEO of Cell Impact, Per Teike. And with that, I leave it to you, Per.
Thank you very much. I would like to start this session with a video so that we can get a glimpse from the real operations in Karlskoga. And then I think I should press Control L or just the start button here. It's quite good after lunch coma, isn't it? To start with a video. Then we have Control L. Let me just say that we are not present with our own branch offices in all these countries that we showed here, but we are present in Germany with our own branch office, China through Business Sweden, and most of the other countries as well through Business Sweden or partners. And in Japan, we have our own legal entity. So, some of you may have followed Cell Impact before, but let me start to give an overview. And it is relevant to go back to 2018 when we started a new strategy for Cell Impact. And that was then to use our own technology, the forming technology that you saw in the movie here, and produce flow plates for fuel cells and electrolyzers. And at the time, we brought in a number of very important, rather big inquiries from the US and Japan, and some from China as well. And amongst those were Plug Power, which is the world's leading fuel cell supplier outside of the automotive domain. In 2018, we started something that we call Phase 1. And Phase 1 was a phase where we needed to act very quickly to capitalize on the inquiries that we got and then put together a production system that was good enough, but that enabled us to grab the business and to start actually invoicing something going forward. And then in 2022, we were sort of transitioning from Phase 1 to Phase 2, and Phase 2 is something that entails expanding on factory space. We are currently in 2,500 square meters of factory space, and we are moving into another 2,500. And here then we are going to be lean and mean, put in smart processes that will lower the cost significantly in the company. And this is very important also for the profitability development in the company going forward. So we've had a number of years of internal focus, and this was necessary because the challenges that we received through the inquiries from the US and Japan in particular were in excess of what we were able to handle, quite frankly, at the time. But now, since some time, we have had an external focus, and I'm quite confident that now we will see the next phase also commercially, where we will bring in customers from the European Union and some other European countries as well. We also look upon Korea, Australia, India, and Canada as important markets for us. And as you can see here in the sales development, something happened in 2018, and I think that was a receipt of that there was something right about the strategy. And then from then on, as you can see, we have increased sales quite well over the years. So what we do is that we make flow plates, and flow plates is not just any piece of metal. It's a very demanding component to make. It's thin, 0.1 millimeter, made of titanium or steel, and it has some very sharp geometries, and this is the challenge to produce without having quality issues and cost issues for that matter as well. We use cell impact forming. That's our own proprietary technology. We have a number of patents, some 5 patents that takes us up to around about 2035 that protects the technology. And this one is scalable, it's green, and it's cost efficient. And this is also what is attracting prospects and customers coming to Cell Impact. We as a company have also developed a number of industry firsts when it comes to smart downstream processes, when it comes to laser processes, leak detection and the like. That is now being rolled out across the globe to other producers of flow plates as well. So the hydrogen economy and the market is driven by some rather powerful political initiatives. We have the EU Green Deal, which is, I think, the catalyst for a lot of political initiatives coming out around the globe. And recently then you have heard about the US Inflation Reduction Act. That is a competing political initiative, if you wish, but that is going to drive the industry forward as well as the EU Green Deal. We have energy security. Hydrogen is critically important in terms of ridding ourselves of political dependencies, for example, that of Russia. There are a lot of things going on in the hydrogen industry, and if you look at electrolysis, for example, there will be something like $250 billion of projects that are shovel ready, and this is now the time when the industry is accelerating. McKinsey says that by 2050, possibly 28% of power demand will be satisfied by hydrogen. We have had some hiccups along the curve. We have had COVID, which slowed down the curve a little bit. Our customers, for example, have suffered from this. We haven't suffered so much from it, but to some degree. And we have the Russian war, which a little bit like COVID creates upheaval in the supply chain, and this is also causing some delays. We as a company have come through these challenges so far rather well, but I would say that also we have give and take a year and a half of delay in our development, but it's primarily coming from customers rather than Cell Impact in itself. But the good news is, of course, that political initiatives that will drive the market have been reinforced as a result of this. We have 2 applications that we look to when we develop our business. One is fuel cells, and we turn to all kinds of fuel cells nowadays. We have low temperature fuel cells, and we have high temperature fuel cells mostly for stationary applications, and we have electrolysis or electrolysis. And there are a number of different technologies here, and we can handle some of them, and some are a little bit more difficult. And we produce these kind of flow plates for that kind of application. This year we will have our first electrolyzer business, I would say 1 to 2 years quicker than we thought. This is a picture that is made by Hydrogen Council. As you can see here, they think and project that things will develop linearly over time up to, let's say, 2030, when we will have big commercial jetliners even with hydrogen. But I can say that whereas we started in 2018 to supply Plug, for example, who in turn supplied forklifts, fleets with Amazon, Walmart and the likes, today we are in most of these application areas as it is. We are with Plug in forklifts and other logistical vehicles. We are going to be part of stationary applications. We are supplying transport industry to Plug, to Hivya indirectly. And we are in electrolysis, and we are also in marine applications. Not all the time in an extensive way and continuous production way, but we are there with our customers who have started to build their pilot applications and so forth. And we are already in the air, flying around with titanium flow plates. Fuel cells is a dramatic climate mitigator. And if we look at what happens when a fuel cell replaces a diesel driveline, and we have supplied the components to that fuel cell driveline, and we take a case of 40,000 city buses that drives 60,000 kilometers per year, and we replace the diesel with fuel cells and hydrogen, we will then avoid 2,600,000 tons of CO2, which is a massive amount of CO2. That would be equivalent to 2.6 million flights, Stockholm to Malaga, or even 5% of Sweden's total emissions. So this is a very strong ESG component that we have in our business. The problem that we solve has to do with scalability. One major issue with anything that has to do with electrification is scalability. And in the hydrogen case and fuel cell case, we have flow plate manufacturing. And when the industry looks at scaling up production of flow plates, they see a problem in the sense that there is a legacy technology that will produce the flow plates. But if we look at our business, we can say that it's a unique business in the sense that the volumes involved in supplying even a moderate demand are enormous. So this is a very unique thing with Cell Impact's business, and the closest we can come to have something similar would be perhaps semiconductor industry that have that kind of volume curve. But if we take a vehicle program of 100,000 vehicles, we fit a fuel cell with 1,000 flow plates. That gives us 100 million flow plates. That will be equal to around about 7-8 production lines in Cell Impact, give and take with 2 shifts. And then what happens when the industry is going to produce these flow plates, then typically what they use is the equipment to the left here. And this is the first part of the process of 5 processes to produce a flow plate. And as you can see here, this is a huge equipment. Comes in high capex, high opex, and it requires a big factory accommodation. Most of the time you need to dig down the equipment into the floor, 5 meters, and you have a very high ceiling height as well. So significant factory accommodation. Cell Impact Forming then is a 3-meter high machine and 1.5 by 1.5 around the waistline. We can put it on a normal industrial floor. It's quick to produce, it's quick to install, and in that sense we also have a better business case, because when people who are looking to purchase flow plates look at adding the extra capacity, they are looking at lead times of 24 months for new equipment. And we then today, when we are barely up and running, we have maybe made some 6-7 of these equipments. We can supply those in 3 to 6 months. But we don't sell the equipment. We use those for ourselves. So we are a producer of flow plates. We do not sell the equipment, but we can see that there might be opportunities, or requirements in certain situations that we cooperate around the technology and create a business together with somebody who needs the flow plates. So how good is this then? If we look at the initial part of the processes that tend to be the difference then between Cell Impact and other producers in this industry. So we have the forming and some equipment around the forming. If we take the capex and we go back to this automotive case with 100 million flow plates, we can see here then that on a capex basis, and this is important because it ends up in the underlying cost of the flow plates, we avoid 39% of the cost. On the OPEX side, even more, 51%. We use very little energy, 85% cost avoidance, and we don't use any water that the competition is using, and that tends to attract a huge amount of capex as well. So in total, we have a cost avoidance of 45% and a total of 785 million Swedish kronor for a program of 100 million flow plates. Then, of course, there are other things coming to this as a production process that tends to have a commonality between what we do and what other people do. But we have a significant advantage here with our unique IP that comes from the weapons factory in Karlskoga, and a key component of the forming equipment is an impact unit that is a triggering device for projectiles in a cannon. So we have had a good development over the last number of years. It could have been better had we not had COVID and some of the issues arising from the Russian war in Ukraine. So we have a result on an EBITDA basis that is not so good, perhaps, but it is there in view of that we are investing in a company that is going to be a key player in the years to come. And we have ambitious financial targets for 2024 and 2027, and we target to have a sales in 2024 between 250 and 300 million SEK, and by 2027, 600 million SEK. And an EBITDA margin in the medium term of 15% or greater. And with phase 2, which is an important initiative then to drive down cost, we hope to be able to see an EBITDA break even during 2025. So when we look to the future and we look at what we have experienced and what we experience now, we can see that the key success factors are that we have an available production capacity. When we receive visitors in Karlskoga from aerospace industry, automotive industry, from here and there, they are quite impressed with the fact that we have the kind of capacity that we have built up. We have the scalability. We talked about Cell Impact forming. This is going to be a decisive factor, I think, to our advantage when it comes to the next number of years. It's a very knowledge-intensive industry, because when we look at the applications and how we make a flow plate, then that has to fit with the performance in a stack, and that in turn with a fuel cell system. So we have a significant amount of knowledge already, and we have gone through in excess of 50 projects, and a project would be a flow plate project, and there are some 10 to 12 overlaps there. So we have amassed during the last number of years cutting-edge knowledge that will be instrumental for us in developing the business going forward as well. Process engineering. I mentioned that we have developed a lot of nifty processes after the forming during the last number of years as well. And the reason too why we do that, I believe, is that we are a small, innovative company without legacy reference frames that enables us to do things that other people haven't done so far, strangely enough. And we have production in place then that in total gives prospects and customers quite a bit of confidence in the years coming. Thank you.
Thank you very much for that, Per. Let's move on to some questions.
Yes.
So recently you've been on quite the growth journey, one could say. Could you maybe talk a bit about the outlook going into 2023 now?
Yes, we have grown and we are now humming on all cylinders, so to speak. And we come from a year where we put in place a lot of equipment and we added on a good number of people. And that means that we are in the midst of the learning curve, so to speak, and we are trying to extract as much capacity as possible from the capacity that we have installed. But if we look at the flow plate manufacturing, we think that we will grow that business by around about 25% in 2023. We also have projects. I mentioned about the 50 projects. These are tooling projects. They are synonymous with flow plates. So we will have a fair bit of that as well. So I think that in total we will grow the business by some 25–30%.
All right, thank you. When you showed us that picture of your technology compared to competitors, that was quite the difference in size, one could say. How is the competition reacting to your technology? What are competitors doing? How do you think this will develop going forward?
Yes, I think that's a very interesting question. And what we do see is that there is quite a bit of interest and concern also from our competition. And I think that the thing is now that we are getting closer and closer to a phase where the industry is going to accelerate. And then what happens is that a lot of our competitors are placing or trying to place orders for the kind of equipment that we looked at here. And they discover that the lead time is 24 months. And that means that now, when things are going quicker than we thought that they were going to go a few years ago, this is a problem. And we then see that there is an interest in actually cooperating to some degree with Cell Impact to see whether we can actually support in taking care of some of the demand. But that is not to say that we will do that and that this is going to happen. But I think it is a receipt to the fact that we have something that we can turn into our advantage here.
Mm. All right. So starting from this position of growth that you're in currently, what is it going to take to reach profitability from this level?
So phase 2 is very important. And phase 2 then is smarter processes, and we reduce the labor component in our cost significantly. We had a number here of 85%. And that is going to make a huge difference. And then, of course, we're going to grow the business so that we get the volumes up, and that in turn is going to drive the cost down and absorb more of the cost that we have. We are a fairly top-heavy company in the sense that we have quite a bit of technical developments, and we do have some international presence. We have Japan, we have Europe, and we have China. So we need to get the sales up to justify that overhead. Yeah.
Mm. You mentioned specifically vehicles and data centers as applications. If we zoom out and look at long-term perspective, what other possibilities are there?
Yeah, I think generally speaking, when we talk about hydrogen, we tend to believe that everything has to do with the automotive sector or the transportation sector. And of course it does, because a lot of the electrification benefits will be in that sector. But actually, for us, a lot of the attractive business and a lot of the growth will come from other applications, B2B applications. We had power or stationary power here as an example. That's going to be a major application. And this is driven by 5G. Data centers are dirty installations in the sense that they emit a lot of carbon dioxide in places where the grid is not so clean. So that's going to be a major business for us as well. And we had one example here in one data center where we have, let's say, 2 to 5 megawatt of an installation, and that will accumulate up a lot of stacks and a lot of plates here. So I think we will have a lot of growth in non-automotive sectors, and I think that we will be everywhere. I mentioned that we are even flying around in commercial turboprop airplanes, not in commercial, but in planes that are going to be commercial with 50 to 75 passengers. So we're going to be all over the place, and we will be in the automotive area as well, I'm sure, to some degree. But I have to say that the automotive case then is a little bit special for us in the sense that our competition then is typically in-house. So when we talk about the market, we typically talk about the automotive and the in-house market and the non-automotive and the more open market. And that's where we are focusing our efforts for the time being. Although I would say that we probably have one of the more demanding development cases in Japan that is not translated into big supply of flow plates today, but it is driving our process development and the company forward in a big way.
All right. Thank you, Per. That's all we have time for today. And thank you all for listening.
Thank you.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalanowski, and I'm an equity research analyst here at ABG. With us today, we have Patrik Höjer, CEO of Precise Biometrics. He will present Precise Biometrics to us, and then we will have an opportunity for a brief Q&A. And with those words, I leave the floor to you, Patrik.
Thank you, Nikolai. Thank you so much, and thanks everyone for coming and listening. Yes, my name is Patrik Höjer. I started as CEO for Precise in June last year, so I've been here 7-8 months. I got a background from payment business historically in a PE-backed company called Nets, and before that in the telco industry. And I think looking at sort of what combines my career historically is that I've been in environments where we've been on a journey. And I think that's exactly where Precise is right now. And I will come back to and explain why that is so clear to me. So I'm really happy now to sort of give you a brief walkthrough of Precise, what it is today. And I think if you haven't listened in to Precise for a couple of years, you will see that we're a quite different company today compared to what we were just a few years ago. So starting then with Precise. Precise is a software company. We're not producing hardware compared to maybe some of the peer biometric companies in the Nordics. And that's a quite big difference, right? We have, during 25 years, been able to build up a very, very strong competence in biometrics. And biometrics is basically about advanced image analysis. You're comparing one image to another, and you need to do with a very, very high security, secure these pictures matches, and you need to do that in a low latency, in an environment where the processors that you use doing this on might be small, or the security demands might be very, very high. So this is a very, very complex environment. We have today an organization with approximately 60-65 people, and with most of the people in Lund, where we have our R&D office. But we also have a few people internationally, very close to our customers, because we are already today providing services to some of the biggest mobile telephone companies today. We are today in approximately 10% of the mobile phones with our software. It means that we're doing more than 10,000 fingerprint verifications every minute with our software worldwide, which is kind of cool. Looking at the financials, we have, despite a quite tough macroeconomic situation for consumer electronics right now, been able to grow in 2022 to 91 million, approximately 9% versus the year before. We had a positive EBITDA, and cash flow from operating activities was also positive last year. The other thing we're very proud of is the new area, which we call digital identity. And that's an area where we have been building up something we call annual RR, a customer stock, which is generating cash flow, like a telco company, for example. We're building that up, and we have increased it with over 25% last year to 60 million kronor, which is a stable underlying revenue, which is growing. And we're today listed on the small cap at Nasdaq. So let's jump into the different areas then, and starting at looking at the company, how we're organized. Today, we're very clearly organized into two different business units. The Algo business unit, which we see to the left, that's where we're doing sort of the fingerprint algorithms, the historical part of Precise, where we also built up some really strong world-leading knowledge. We're supporting mobile phones, but also laptops, door locks, and so on in this area. On the right side, you see the business unit Digital Identity. Here we have two complete software systems that we're supporting the market with. One, which we call Precise Unique. Precise Unique is a physical access solution based on facial recognition, meaning that you can get entrance to a facility via your face. And the other part is East Coast Visit, a company we bought in 2021. It's the market leader in visitor management solutions, taking care of temporary visitors for big companies or for small companies as well, that needs to have a digitalized solution to secure who is actually moving around in their facilities. Yes, so let's jump into the Algo business to start with then. If we look if we look at the precise sort of the biomatch part, as we call it, this is basically, which is also something we should be proud of today. This is also a end-to-end solution, software-wise, when it comes to fingerprint recognition. It means that we are today doing the ISP, which is the image sensor processing, the sort of the first image signal processing, which is the first part where you get the raw data. We're doing the biomatch, which is basically matching two pictures, and the anti-spoof, which is basically securing that it's not a spoof material, it's not a dead person or a fake material, whatever. So you have the full sort of solution. Comparing that back to a few years ago, we were only doing the biomatch, but now we're coming in with the full suite, which is helping us creating stickiness and a broader solution to our customers. And as you can see, we're doing this in quite many different use cases already today. The biggest one, which I mentioned, is the mobile vertical. Today we have partnerships with some of the biggest sensor manufacturers in the world, like Qualcomm, Infineon, Edge's Technology, and so on and so forth. We've also worked with strong focus to move into new verticals, new embedded verticals, like door locks and automotives and so on, and been able to sign up quite a few customers there as well, 20 customers plus in this field. The revenue model here is based on two things. One is an annual license fee, meaning that you get a sort of a recurring revenue from it, like a base fee from the customers every year. This means that we can also support smaller customers which might not have so much sales yet, but we get our revenue anyway. And then we have royalties, which is a variable fee. So when they win projects, when they sell the sensors, including our software, we get a variable fee as well as an income. This business has a positive underlying cash flow, and it stands for 74% of our revenue today in 2022. And why is this so interesting then? Yeah, I think it's interesting due to the underlying market trend. One thing is the mobile segment, which we are supporting today. You can divide the market today into three different sensor types. If you look at your mobile, you have capacitive sensor, which is basically where you can see the sensor where you're pushing your fingerprint in some mobile phones. Then you have sensors which is hidden under the display. They're based on optical sensors or ultrasound sensors. And we are primarily active in the two latter ones, the under-display sensors, which is the more complex algorithms, the more complex software, and where is less price erosion as well in the market. It's also predicted that this part of the market will grow and eat on the capacitive sensor side during the coming years. So that's a good position to be in. We can also see that quite a few, like in the Android field, are going back more to fingerprints. Sometimes in combination with facials, but for sure having fingerprints as a strong way of authenticating yourself. And then looking at the other embedded verticals, looking at laptop, for example, there's a clear bio drive in this area as well. We know that there are coming requirements from Windows Hello, for example, that you need to match on chip. You should match your fingerprint before you turn on the computer for an enterprise, for example. With that, there's much higher security than having sort of a facial recognition or something similar where the main CPU has already started, because then you can hack it. When you look at door lock, that has mainly been a sort of Chinese thing historically, with the biggest market there. We can see that growing internationally as well, expanding and having a quite strong growth the coming year. Automotive is another thing. I think that's a very interesting vertical as well if you compare it to where mobile started. A few years ago, when fingerprints or biometric was introduced to the mobile area, it was about convenience, right? I mean, it was much easier to use your fingerprint or face rather than the PIN code or whatever. We can see the same in the automotive space. In this area, that we first talk about maybe convenience. I mean, adjust how you sitting and making sure that your kids couldn't drive more than 110 kilometers per hour. But now they're also talking about in-car payments. For charging or for tolls or software updates and so on. We can see that some of the bigger car manufacturers are forming sort of financial institutions to secure this. And that will change also the use cases and importance of this in the future, where fingerprint is a very strong use case part with where you have clear intent of paying, right? Versus face or palm or something else. Nikolai, I don't have track on the time. Can I see that somewhere?
Yeah, I think you have a clock to the right-hand side of the computer behind the...
Thank you. So jumping from Algo, the former one, into the new area, the digital identity area. This is our physical access based on facial recognition, a solution, a system solution we have been developing during the last 3 years. We are now in a phase where this system is finalized, and it's more about commercializing and taking it out to the market, securing the right sales channels. And it's a very easy onboarding and user experience with this one as well. It's basically about if you want to invite someone, an employee or a visitor, then you send out a email link to this person. That person can take a selfie with their mobile phone. That selfie is sent back to the server, and then when you approach the camera, the door opens by matching these two pictures directly. We have today been focusing quite much on Sweden. Now more and more focus is on US due to the fact that this market is much more biometric mature and it's much larger. I will come back to that a little bit later. We have also during the last years been working heavily on integrating technically our solutions with system integrators and access systems in the markets. We have today integration with the big ones like RCO or Integra or Genetec in US, some of the biggest access system, which is fundamental to make this happen. Here we have a revenue model, which is called which is basically software as service, the recurring revenue model, as I talked about before, like a telco company. Why is this interesting? I think this is very interesting due to the fact that there is a clear biometric drive versus in the physical access area. You can see that Asia, you can see that in US, and we here in the forefront with a strong solution in the market. We can see in independent service that there is expected big growth in the smart locks area, in the biometric area, North America, where we're now focusing in, is one of the biggest markets in the world, which is also creating us a huge market potential. This is also only sort of just started, right? 6% of our revenue today. So great potential as we see it. Then jumping forward to the visitor management solution. This is a market-leading solution in the Swedish market. We have maybe 25% market share already today with the East Coast solution. It is a fully digitalized solution. It's a cloud-based solution, so it's very scalable and ready for international launch. We have today many customers, I mean a broad base of customers, of course, with the market share we have. Strong partnership with some of the biggest players in the market as well, giving us leads and so on in this area. We have a strong installed base and also a revenue model based as at annual recurring revenue, a SaaS model as a telco. This business also has a positive underlying cash flow. And we bought this business in 2021. We can see that this is helping us to take out the unique solution, the physical access solution to the market by using this sales force as well to the market. And combining these two is a super strong solution together. Why is this interesting? It's interesting because we can see a clear drive versus this area after the pandemic. People are moving back to the offices. There is a demand of higher security. You need to keep track who's in your facilities. You need a strong digitalized solution in this sense, which we can provide to the customers. There's also expected growth in the market for visitor management in the worldwide, but especially also in US, where we also looking into the market launch of this product through partnership. Good. Looking then at sort of the vision and the financials going forward for Precise, we have a clear vision and growth agenda for our two business areas. If we start with the Algo area, it's very much about focusing on strategic partnership. We have, if you go back a few years, the fingerprint area was like Klondike. It was a lot of small sensor manufacturers that wanted to start up their business. Many of them didn't really succeed. There's been a few players that's been really successful in the market, like Tech or Qualcomm and so on. These partnerships we do hold, and together with them we win strong partnerships in the mobile area. So it's been a consolidation of that market where we have positioned us quite well. In the other part we're talking about for the growth is to go into more embedded verticals like automotive and laptops and so on. Finding strong partnership like Infineon or Canvas Bios in Korea and so on to secure our solutions there. And also looking into new partnerships, new sensor manufacturers. There's a French company called iSorg who has a new technique that might change a little bit the dynamics in the market with bigger displays, bigger sensors in the screens that can create new user cases and so on on a cheaper level. And we have been well positioned there, and they choose to work with us as well. And then beyond that, we can see that we are today focusing on maybe the most complex part of advanced image analysis, fingerprints in a very high security environment. And we can see that this knowledge can be used in other areas as well, in DVS sensor, which is event cameras and so on. And we're exploring if we can find good user cases there, potentially maybe together with Tech or some other hardware sensor manufacturer. So our vision here is to be a software powerhouse when it comes to licensing our algorithms in this area. And I think we have strong proof point that we have this leading competence. In the digital identity area, it's about partnership with access management companies to bring out the unique solution, which is now sort of in a commercialized phase. We also talked about bringing this into the US market, which we are focusing on. We had a strong deal here with a Genetech, or a partnership with Genetech, which is a leading North American access management company, which is giving us a sales channel into the US market. And then we are exploring if we should white label the product to enter new markets through partnership as well. We believe that we can find a leading position when it comes to people flow management. Then looking at sort of the financials, what we could see in the second half of 2022 is that the market had a sort of oversupply when it came to sensors. In the beginning of 2022, many of the OEMs asked their sensor and module house to produce a lot of sensors because they thought that the market would kick off. So they bought up a lot of stocks. Then in second half, we could see that the macroeconomic hit the market, so the end customer demand declined a bit. So there was a combination in H2 of oversupply and lower end customer demand, which is not healthy for the ecosystem behind the OEMs, the big mobile phone manufacturers. We could see that our variable revenues declined quite substantially, not because we lost any partnership, right, but because of the oversupply in the market. That we predict, we look at rate, they predict in the market that this will slowly normalize in the second half of 2023, which means that royalty revenues is expected to come back again. The other part, which I talked about before, is the digital identity area, where we can see that we increased in the recurring revenue, which is important and a proof point of building up stable, strong underlying revenues. We had a positive operating cash flow during the year as well. We could see that we were growing 9%, as I said before, between 2021 and 22. What we also done now, due to the macroeconomic situation, is that we've done some OpEx optimization. We are declining the cost with approximately 10 million SEK in 2023. This is mainly done due to the fact that we're now into a commercialization phase rather than a R&D expense phase in the unique area. But we also saw synergies when we integrated East Coast, the acquisition we did in 2021, with the Precise organization. Looking at commercial opportunities, as stated, right, we are expanding into embedded segments where with new partners. We see the digital identity area where we see a strong growth in 2022, plus 25%. And we also expect, we also have we see good proof point when it comes to the US launch with the Genetic solution, for example, Genetic partnership, for example. But we also won our first customers, hospital chain in New York State, end of last year, which is a strong user case and proof point of our capabilities in the market already. Good. To summarize then, why should you keep track on Precise going forward? I think this 6 bullets sort of summarize that in a fairly good way. We have a proven world-leading biometric expertise, where it's now much about commercializing our strong software solutions, and I think we can also see that in the revenue we have and in the partnership we have. We are hardware agnostic, which means that we can use our algorithms or software in the embedded space, in the mobile space, and so on, which is fairly unique. And that can then help us to expand into embedded verticals and so on, which I talked about before, like laptops, cars, and so on. We have 3 leading software solutions which have commercial potential. And we have started to diversify our business model. I mean, already today, more than 20% of the revenue comes from our new area, and which is also showing strength and stability. And then we have put strong commercial potential in the US market with a business model that where we're building up recurring revenues. And I think we have a very strong, clear vision also where we are heading, and have strong proof point on that we are leading in the different areas where we are working in when it comes to licensing algorithms and providing strong solutions to people flow management. Good. I was a little bit unclear about the time, so I'm not really sure how many minutes I used.
No, of course, we have a few minutes left for a Q&A. But
Perfect.
Thank you very much for the presentation. And let's just kick into the Q&A. So
Yeah.
I'd like to start with, you explained in the Q4 report that you have focused on expanding the business through partnerships. Could you just dive into a little bit, what are the benefits for Precise in this case, and what is the rationale behind the partnerships?
Yeah, so looking at the 2 different business areas, business units, if we look at the Algo business unit, as I stated before, we could see that the market, when it comes to fingerprint sensors, has consolidated during the last couple of years. So we can see that a few players right now are clear winners in the market, like Tech, like Qualcomm, and so on, which are important customers to us, partnerships to us. So of course, together with them, I mean, they need the full solution, the hardware and the software. Those combined makes us win projects. So I think those partnerships is really strong proof point for us, and also a way to generate more royalties in the future and win more projects in the future. And we have seen during 2022 quite tremendous improvements of our software as well, which is further sort of strengthening our position. We're using more AI technique and so on to train these algos and so on to make them much stronger, and quite dramatic movements when it comes to quality in them. So that's why they are so important in the algo space, in the algo fingerprint space. In the digital identity space, it's about we see our solutions as complements to the access management companies, and we also want to use them as sales channels. So having strong partnership, I mean, we have technical integration, as I said, and commercial discussions with all the big access systems in Sweden, for example. They are crucial for us to roll out our services into the market. Yeah, and if we go into the algo segment, perhaps the royalty revenues there, as you mentioned, declined because of an overstocked OEM, or a bunch of overstocked OEMs in this case. How should an investor view this case, and what sort of mechanisms could lead to a destocking of inventories at the OEMs? Yeah. I mean, when it comes to the destocking part, I mean, that, as I said before, there was sort of in the second half of 22, there was a double sort of effect in the market. You had the overstock and a little bit lower customer demand. And the lower customer demand was maybe only down 10-15%, but due to the fact of the oversupply, the royalties were down like 70%. because they took from the stocks instead of buying new sensors, right? And of course, they have been during the second half of this year been eating of this stock, right? And they continue doing that. So as that problem is slowly fading away, which means that the royalties will return. Then the discussion is okay. So that's one part, and that will gradually go away, right? But then, especially as new models are coming, new phone models and so on. I mean, I think everyone expects to continue using mobile phones and buy new mobile phones, right? So that will take us back just because of that. But then the other part, I mean, where does when does the market pick up again, sort of to normal levels? I think just due to the oversupply will pick up tremendously. But then right now, I think many talk about more normalized levels in the second half of 2023 when it comes to the end customer demand.
I'm afraid that we're out of time there, but thank you very much, Patrik, for your presentation and for the Q&A. And to everybody listening, thank you all.
Thank you. Good.
Good afternoon, everybody. My name is Oskar Rönnqvist. I'm an equity analyst at ABG, covering the iGaming sector. With us here presenting today, we have Hessi Mokka, who not too long ago became a member of the board. So with that, I'll leave the word over to you, Hessi. Please go ahead.
Thank you, Oskar. Thank you for the quick introduction. Let's jump right into it. So we had recently our Q4 report 3 weeks ago, and I will walk you through that a little bit, and I will hopefully get some good Q&A questions from Oskar later on. So our Q4 highlights: we delivered another all-time high revenue and EBITDA. It was a very strong quarter for us. Our media division achieved a 91% year-over-year growth in first-time depositors, which is a very important KPI for the media team. Our platform and sportsbook continued delivered positively with 4 new brand launches and 6 new clients signed. And media signed our first publishing partnership agreement with News Corp with the 2 brands, The Sun and TalkSports, which I will talk about a little bit later. And the biggest announcement was that we signed the AskGamblers deal that we bought from Catena Media in 15th of December. So our numbers quickly is that we hit 26 million euros in Q4 in revenue, and our adjusted EBITDA was 10.8 million euros. And we've been growing for the last 12 quarters, all our KPIs. Our pro forma results came in at 92.5 million euros, which was in the upper range of our guidance, which was between 87 and 93. And our pro forma EBITDA come above our guidance, which it was between 30 and 35 million euros. We hit 35.5. A quick business update from the media business. We reached all-time high revenue of 17.8 million euros. And we grew 40% year over year, all organic, which we're very proud of. Our EBITDA, adjusted EBITDA, grew to 8.9 million euros, and we had an EBITDA margin of 50%. Both paid and publishing, which is 2 verticals within the media business, grow to all-time high revenues. And we had obviously a positive impact from World Cup, but due to us signing a lot of rev share contracts, which you see in the column down there, is that we get recurring revenue from these contracts, which will follow us until 2023 and onwards as well. And we have 60% of our revenues were from those rev share contracts, which is recurring. And if you look at the full year, we had 61.7 million euros in revenue and approximately 30 million euros in EBITDA. And we ended the year with a margin of 48%, which is in the range of what we always discussed before, me and Oskar as well. This is a very important KPI, which is the first-time depositors. We reached all-time high levels at 116,000 FTDs for Q4 and netted above 350,000 FTDs in 2022. And these contracts are very important for us when we have our rev share component, which these contracts will be contributing with money hopefully in the next 3 to 5 years as well. And if we look at our revenue split, is we have hybrids of 45%, which is both a CPA component, which you get one-time fee and revenue share, and 50% pure revenue share. So together we have 95% of our new contracts is some kind of a recurring revenue contract. Our US traffic grew 76% year over year, which we have taken another approach to US market. If you compare us to our competitors who have bought a lot of assets in US, we want to grow our business organically and be more of a statewide approach with our 2 big brands, or now 3 big brands with AskGamblers. LATAM is a very strong region, which we have invested heavily in since 2020, and that has given us some good numbers and return on investment. Very happy with that. And one other thing that differentiates us from everyone else is that the more mature markets, like the Nordics and Sweden and Finland and Denmark, we are able to grow in those markets still. And that's something that I think is a little bit special for us and differentiate us from our competitors as well. So the big news during the Q4 was the acquisition of AskGamblers. It's, if not the biggest or most well-known casino affiliate in the world. Our competitors, Catena, had it and wanted to make a strategic shift. And as soon as we found out that this one was within our reach, we didn't hesitate. So we think that this could be very good for our portfolio and fits our roadmap. And we see a lot of synergies between the brand and our business, where we can optimize cost and increase revenues by adding what we are good at. We completed the acquisition on the 31st of January, and we have taken over the assets since 1st of February. Now, if we move over to the business update for platform and sportsbook, which is our second division, we reached all-time high revenue for platform and sportsbook at 8.2 million euros. It was an increase of 54%, whereof 37% was organic because we bought another company last year called Sport & Co. Our adjusted EBITDA came in at 1.8 million euros, and as I said earlier, we ended the year with we ended the quarter with 6 new agreements secured in Q4, and we're building up brick by brick in this division to increase the revenue base as well. The platform for full year came in at above 28 million euros, and we have a positive EBITDA of 4.6 million euros all in all. We have in 2022 23 new agreements signed and market expansion deals, which will hopefully be a positive contribution in 2023 and 2024. The business is a little bit built up like that. When you sign a client, you onboard it, and then you start ramping it up. It tends to take between 12 to 18 months before you see the real revenues coming in the platform business. As we said, as I said earlier, we bought Sport & Co., a sportsbook company with an own platform in April 2022, which we're now integrating and seeing a lot of cost synergies between the two companies. We have today 62 brands, 41 clients, and 37% of our clients have our own sportsbook. And it's very important to know that when we sign a client, we don't get the fully potential of the value of the client from day one. So it takes a bit time to ramp the contracts up. And since 2020 and 2021, since we became a full-fledged B2B player, we've signed more and more clients, and we're seeing the revenues coming in 2022 and moving into 2023 and onwards. So approximately 30% of our contracts is premature and very low value as of today. Underlying SaaS and related revenues are growing steadily. It's a little bit hard to explain this, but we had multiple legs before our current CEO, Richard Brown, started to sell. We sold our B2C division in 2020 to Betsson, and we had some component where we had a premium fee, and we had another structure with white labels. So extracting all of this, this is what we get when we see the pure SaaS revenue. So we're doing pretty good, so to say, but it's very hard to explain it sometimes for the investors and the market, because before we had a white label solution, which was we took all the risk, and with the new regulation and new markets coming up, it's very hard for us to do that. So Richard and the team decided to cut the white label business and just focus on the pure SaaS, where we have our own license and the clients have their own license and they can operate on their own license. It doesn't have anything to do with us. So it's since the shift of focus, we've been seeing this transformation, which I'm very happy with. And if you look at the start of this year, we're already signed 3 new platform agreements, including a very interesting one going into the highly regulated and highly profitable Swiss market, which is one of our milestones. We'll go live with that client in early 2024. We also completed AskGamblers acquisition, took over the assets, as I said, the 1st of February. Media trend is strong. Our FTD grow by almost 40%, and January developed very positively with 29% year-over-year growth. And that should be said that this year, if you compare it to last year and the comps we had, is that we had COVID relief this year, and last year it was still a lockdown where the activity was very high, and we're coming from a period with World Cup, which a lot of operators put most of their investments into the Q4 and the World Cup, and draw down their investments in early 2023. Despite that, we had a growth of 29% compared to last year. So our long-term financial targets is to grow in the region of 20% organically year-over-year. Profitability is to hit EBITDA target of 50% during 2024, and use that cash leverage to either pay down debt, we have a bond we have to pay down, or look for other opportunities that is like AskGamblers or whatever might be available for us out. And a quick summary. All-time high revenues and EBITDA. 2022 was an exceptional year across both units, I would say. We have a very large geographical footprint and our addressable market with our acquisition of Sport&Co has grown to double size. We are improving operations. We are improving cost efficiency. We said in the last quarter, in Q3, that we have found approximately 8 million euros in cost synergies, which will come to fruition during 2023 compared to 2022. And we also initiated a strategic move to split those two companies, the media business and the platform and sportsbook business, two entities. And that's just to create this razor-sharp focus, capital allocation, and make it easier for investors to understand what we do. And sometimes now it's the equity story isn't there. We get the valuation of media business or the platform business is much higher than the media business. So we're trying to keep those two separated and create two companies out of it. And this work has started already, and we will continue to do that throughout 2023 to find the best solution to create as much shareholder value as possible. Yeah, that was all for me.
Right, thank you for that presentation. I'll continue with some questions. So just the first, the one that you actually ended the presentation about, but just if you could expand on the strategic review, potentially splitting up the two divisions into separate listed companies. So if you could just elaborate on the main benefits in your view to have them as separate listed ones.
So basically today we have two separated companies with a mid-management, and we're seeing that the focus isn't there. Sometimes you're over-expanding your... the investments that we're making is now from a group level, and not because the media business have shorter horizon when it comes to return on investments. Like we buy AskGamblers, we get cash from day one. We buy Sport&Co, it takes 6 months before the clients ramp up. So therefore for us it's better to create two entities where we have two leading teams creating their focus for each leg. They have their own P&L, they have their own investor relation, they have their own journey they can move forward to. So, and our B2B business with the platform and sportsbook division has been a little bit immature from this transformation that we made. But now we've come to a position where we're seeing actually the platform division starting to grow, starting to come to its own, like, what is it, closet or whatever. So it seems we're very confident that the platform division will become more efficient, more synergies, no more extra adding costs from the central layer. It will be razor-sharp focus, and they can create their own division and create more shareholder value for our shareholders. The B2B valuation is often a little bit higher than the media valuation. So if they want to add something or use the capital allocation for adding a payment solution or a game studio, whatever it is, it's going to be easier for them to have that trip. Instead now we have to dilute both companies if you want to buy AskGamblers or if you want to buy Sport&Co. So, and it's also two different type of people working in the company as well. The media business is very fast-driven, very cash-hungry, and a lot of deals made every day, where the platform business is a little bit more slower business, and we have to build and it's two different businesses, and we don't see the synergies coming from those two companies, unfortunately. So it makes more sense to create two divisions and unlock the potential value from both companies.
Right. And just you touched upon the Sport & Co acquisition synergies. So you said that there were a lot of cost synergies, but don't you have any revenue synergies as well? Just looking at the market expansion that you can be able to.
So basically, since we bought them 1st of April, and our first contract was Angola. We signed an Angola contract with them, where they take our platform and their sportsbook. And now we're going into US, in Maryland, I think in next month, with a brand called Crab Sports, where we go with our platform and we take their sportsbook. So there is a lot of synergies moving forward as well. Just that we cut our own sportsbook, which cost us 1.8 million euros in 2022, which was announced as a non-discontinued operations, but it's still cash we're saving. Yeah, a lot. And then they had also a lot of licenses, which is key when you move into the regulated market. So our addressable market with us buying Sport & Co took us from 14 jurisdictions to 25, and now we have approximately 35 and moving up to 40 jurisdictions before this year ends. So our addressable market is growing for every quarter that goes by, and we don't need to do Portugal, Spain, Greece, or whatever it is. So we also bought us a lot of time and money for not moving into those markets. So yeah, 1st of April is our first year with them together. It's been very successful, very strong team. Their management team has been amazing. So only high praise for them. So very happy with that acquisition.
And then also in connection with the Sport & Co acquisition, I think that you mentioned savings of, was it 8 million? And then when you acquired AskGamblers, you told the market that you were supposed to run it with quite high margins, 60 to 70%.
Yeah.
I remember. So are the synergies or sort of the cost savings, are they going as according to plan, or?
On the AskGamblers acquisition?
And the Sport & Co.
Yeah, Sport & Co is going according to plan. That one we started already like 9 months ago. So that one's already in motion, and that you'll see happen every quarter moving forward. AskGamblers, we have already identified a lot of synergies where they are strong, which is the brand, and it's not Google dependent as well. So it's a very good complement to our portfolio, which means that we can now use what we are strong at, which is business intelligence. We have one of the best in business intelligence teams and tools, which we have developed the last 5 years in the media team. So we can see exactly which market, what kind of players, what kind of value is this search word valued at, and those things we're already applying to AskGamblers team, and we're seeing already some good numbers and good traffic coming in from AskGamblers. So very excited. But as I said before, the media side is in a much higher pace. So you will see the differences with AskGamblers. If you compare it to Sport & Co, the cost cutting will come quicker, the revenue increase will come faster due to it's being a high-paced industry. So yeah, we have our fixed fees model, which some are calling it the recurring revenues. We're able to bolt that on top of AskGamblers' big brand, which will hopefully bring some more revenue coming into us as well. So yeah, a lot of moving parts, a lot of fun, a lot of hard work, but it's yeah, you can see the different paces moving forward in H2 2023.
All right, and just staying on the AskGamblers acquisition, so just apart from the multiple that you bought it on and also the payment structure, just focusing on the operational performance itself in your group. So what can you bring to the table? You talked about business intelligence, but what other things can you, provide, turning the revenue decline that they had in the hands of Catena Media?
Yeah. So I don't want to talk about what they did, but what we're going to do is that we're going to open up more markets. We're going to identify where the revenue is coming from, what kind of players, what kind of search words. We identified a search word in UK, which is very high search word and very profitable search word. And when we come to the offerings, we have probably the worst offerings of all the brands. So we're switching up all the offerings. We're switching up how we're building up the front end, the tech. We're moving it to our own in-house platform where we can deploy more languages, more markets. We're going to revive the Ask Gamblers coin. We're going to, we have a checklist of thousands of stuff to do. So we're just taking 10 every day to keep increasing revenues, keep increasing the traffic. And yeah, there is the checklist. We can talk about it for an hour, so not more. So we have a lot of work to do. But if you compare it to our biggest site, which is Casino Tops Online, and compare FTD per value that we get, our Casino Tops Online, our big brand, which is the competitor to Ask Gamblers, we have approximately 3.5 more times the earnings per FTD. So we're doing something right as of today. So those are the tools we're going to give to the Ask Gamblers team. And we also have the cost synergies. There were 93 people in that brand. We're 180 for a whole media team as of today. So a lot of the workforce is duplicated. And when we can take the tech from Ask to us in-house, then it's going to be another synergies as well. So yeah, looking forward to presenting those numbers in Q1.
And speaking of earnings per FTD, so just looking at your media division, the FTD growth has picked up substantially since 2021, in particular driven by paid media.
Yeah.
And still you have delivered quite solid EBITDA margins around 50%. So just, I mean, looking at paid media, usually is a bit lower margin than the publishing business, dragging down the total group, but it didn't really seem to be the case for you. So what's the secret sauce?
So the secret sauce, I can try to boil it down. We bought a company called Rebel Penguin, where Jonas Varre is now the CEO, 2017. And that was a paid media division, purely, strictly paid media. So they have a team of a lot of people who's been working with this industry in 20 years. And then we also go back to the business intelligence tool where we can look at a market like Sweden or Belgium, for example. What kind of search words is worth X? How much do we have to bid for that search word to get this valuation? If you're a media company with 5 employees and have a budget of 500,000 euros, you won't be able to outbid us because we know that this search word in this particular market is worth 1,300 euros in 3 years. So we will outbid you for that search word. We have that data. That's one part of the reasons, and the other reason is that we do everything on rev share because we can identify when we send a client from this search word to this brand, we know that the value of that contract between between us and the operator is much higher than a fixed CPA, which is where all our competitors now moving into CPA structures more or less. So we're seeing the long run instead of the short income period. Therefore, you see us having higher margins because those clients we acquired in 2021 and 2022 are paying off now with the rev share component, which is almost 100% margin. So there is a blend, but we use everything we do is data driven. So we won't go and invest in Africa if we don't know that we'll get the return on investment. And with pay division that you talked about, it takes us away from the risk, from just the Google risk that everybody says everything with affiliation as with Google. Now we're very big in social media. We're Facebook partners. We have TikTok license. We also have the partnership with News Corp, which is our first, who is owned by Rupert Murdoch. So we're differentiating our risk and getting more and more legs and revenue streams, which has been a very key focus for us in 2022. So we're not dependent on paid or publishing, or we're dependent on everything together.
So just a final question then. How excited are you about the News Corp signing, the media partnership that you recently announced?
I think it's run a little bit under the radar. For me, it's been, we're seeing incredible stuff happening with News Corp. We also went out with a press release, I think it was last week, where we're moving into more English-speaking markets, which is Ireland and the US before this month ends. So obviously we're doing something right, and they want to invest in those markets together with us, which is very good news. It also we get a new leg to stand on. Yeah, very, very excited. Very good news for us. And hopefully we can continue that partnership with them for as long as possible. So we're very happy with that one.
All right. I think we are running out of time, but thank you very much for the presentation and thank you for listening.
Thank you, Oscar. Thank you.
Hello and welcome back to ABG Sundal Collier's Investor Day. My name is Hanna Forsgren and I work as an equity research analyst here at ABG. With me today I have Maha Energy and their CFO, Bernardo Gutierrez. Bernardo, the stage is yours.
Okay, thank you. Good afternoon, everybody. I'm very honored to be invited to talk with you guys. Maha is very honored, and I also ask sorry for not being present. So if we can flip the slide here, another one, please. So Maha passed recently through several changes in its management and its board of directors. So just introducing the new management to everyone. So I'm the CFO of Maha. Our CEO, Paulo Mendonça, he used to be he used to be the chairman of 3R Petroleum. 3R Petroleum is a $1.5 billion listed company in Brazil, founded by Starboard. Paulo is also a founder of Starboard, which is a private equity firm in Brazil. So he has an extensive experience with the onshore market in the Brazil. Myself, Bernardo, I used to work with important Brazilian investment banks like Itaú BBA and Safra. I also worked with Opportunity, which is a private equity firm prior to Starboard, and within Opportunity, which is one of the major shareholders of PetroRecôncavo, which is also a $2 billion onshore oil and gas company listed in Brazil. I was a board member for 4 years. So I also have a previous knowledge in the Brazilian onshore market. And we also have Alan Johnson, which is our COO. Alan has an extensive experience with the oil and gas market, working already with Glencore, Shell. And prior to Maha, he worked with Gran Tierra. So when Maha bought the Gran Tierra assets in Brazil, Alan Johnson joined Maha. So we can flip the slides. Our agenda here is we're going to cover a little bit of how Maha is today, disclosing the assets and giving some hints on our financial data. Let's go to the next slide, please. So recently, Maha passed through several changes and did lots of transactions in the past 3 months. So by the end of the year in November, new board members were elected. So Starboard, as the new main shareholder of Maha, indicated 3 board members. With that, we changed our management. So I jumped in as the CFO and Paulo as the CEO. In December, we made 3 important transactions. We signed a business combination with DBO 2.0, which owns 15% of 3R Offshore. 3R Offshore are the offshore assets from 3R Petroleum, which Starboard was the founder. We made an important capital raise of $20 million by the end of the year to enhance our capital structure, and we sold Maha's Brazilian assets or Maha's Brazilian company to PetroRecôncavo. In the beginning of this year, we concluded our joint operation agreement in Oman. Prior to that, we had farm-outed our participation in our Oman assets to Marfrak Energy in a 35% farm-out stake. In order to comply and to be in accordance with high standards of governance, we understood it was important. We created a new C-level position. So we brought in Barbara, which is our new chief legal officer. And we also introduced Jacob to Maha as our new head of investor relations, trying to be even more transparent and more in contact with our shareholders and with the market in general. We certified our reserves by the beginning of February. And by the end of February, we sold our Brazilian assets for a total consideration of almost $107 million. With all these changes, which we will try to cover a little bit in this presentation, what's the main orientation, the main strategy of Maha for the future? We want to be a cash flow-oriented company, focusing basically in growth inorganically or organically through M&As, And our target assets should be assets where we can find opportunity to ramp up production and to recover reserves. So our CEO normally says when he talks to the market that we, although be an E&P company, we're much more a P company than an E company. You know, so we prefer much more productive assets rather than investing in exploratory assets. We can jump into the next slide. So just highlighting this timeline, which I just covered, these important changes of Maha in its management and its board of directors, it was really important to introduce this mid to long-term strategy. So Starboard, which is a Brazilian private equity firm, currently owns 20% of Maha. As I mentioned, Starboard has an extensive experience with the oil and gas market here in Brazil. Starboard created 3R from zero, and in less than 5 years, it listed the company. And today, the current market cap of 3R is around $1.3 billion. So we understood that Maha had a similar profile or even a more de-risked profile to try to replicate this of what we did in 3R. As I said, we made this capital increase, and much more than the value, the importance of this capital increase was to bring important new shareholders to the company, important long-only shareholders to the company, Brazilian shareholders, Norwegian shareholders, USA shareholders that believe that we can replicate our successful past track record in Maha. This new strategy of targeting opportunistic assets, productive assets that we can wrap up, can be illustrated in this DBO transaction, right? So with the DBO transaction, we brought into Maha 18.5 million of barrels in 2P reserves and a current total production of 2.1 if we take the 15% stake that Maha owns. The farm out and the joint operation agreements in Oman was extremely important because it gave us the pathway with the local government to start our production, which we believe that we're going to start in 2 weeks. And the divestment of the Brazilian entity gave to Maha the war chest necessary, or in other words, the capital structure, the robust cash position necessary for Maha to look for new assets, new acquisitions. We can jump to the next slide. So if we look into what is Maha today, right? How, as we can describe. With the sale of PetroReconcavo, we're very healthy in terms of capital structure. We currently have the USA assets, which is LAK Ranch and Illinois, which we already announced that we intend to sell them. Okay, we have the Omani assets, Block 70, which we believe it's quite certain that we're going to start testing production in 2 weeks. And we also have this new Brazilian assets, Peruá and Papa-Terra, which are the assets that belongs to 3R Offshore, which DBO, which was the company we bought, owns 15%. And I think that is important to illustrate here is that if you look to our production profile, Maha sold its Brazilian assets, which currently produce around 2.3 barrels of oil per day, right? Which made Maha with a 2.6 barrels of oil per day production. And we bought the DBO assets, which currently, considering the 15% of Maha stake, makes Maha with a total production of 2.3 barrels of oil per day. In terms of 2P reserves, it's kind of like the same. The Brazilian assets, according to our last certificate reserves, had around 20 million barrels of 2P reserves, and these new assets that we bought have around 19 million barrels. But the beauty here is that we sold the Brazilian assets with a very similar profile to the ones we bought for $186 million, and with the share issuance that we are exchanging with the DBO shareholders, current shareholders, the total price that we paid for the DBO assets, it's around $36 billion. So this kind of arbitrage of assets is what Maha is looking for its future. Okay, and another interesting thing is that these two assets from DBO, or in other words, from 3R Offshore, they were recently bought from Petrobras, which is the state-owned oil company here in Brazil. These assets weren't being developed. So we believe that now, as a private company, with much more flexibility in terms of CapEx, in terms of investing procedures, we can ramp up this production, as you guys will see in some slides. You can pass to the next slide. So the DBO transaction, summarizing it, we paid around $35 million as current market value for 15% of 3R's offshore. It brings to Maha almost 19 million 2P reserves and a current production of 2,000 barrels of oil per day. It brings also a diversification in our revenue share because one of the assets, Peruá, it's totally gas. It's a gas asset, which brings more stability to our revenue. It's not linked to a commodity like the oil. And right now, the gas market in Brazil is extremely hot. Okay, if we look into if we make a NPV evaluation of these assets, we in a 2P reserve, we price them around, according to the certificate reserve, around $145 billion. And what's interesting is that we paid around $35 million. This makes in other words, we're paying 24% of what we understand that's their price, an NPV 10 valuation price for these assets. We can move to the next slide. And I think this slide is quite interesting because it illustrates a little bit how Maha is being what are Maha's net asset value and how it's being priced. So if we look into this first column here, Maha's gross asset value, if we get the 200, we have around $214 million considering the sale of the Brazilian assets, our 4Q and cash balance, and the reimbursement that we're going to receive from our partner in Oman from past costs. If we add the gross asset value from DBO, which is around $166 million, and if we add the NAV from our Omani and the USA assets, this makes Maha with a total gross asset value of $405 million. If we discount the debt from DBO and also from Maha, our net asset value is around $338 million. If we get our current market cap priced yesterday, which is around $137 million, adding up with what we paid for DBO, around $35 million, Maha's current market cap Maha's current market cap would be around $173 million. This prices Maha in terms of price to NAV multiple of around 0.51 times. If we get the current Norwegian E&P companies, this multiple, this price to NAV multiple is around 0.62 times. So there is around 20% gap here that we believe we can cover. And the beauty here is that if we look to the profile of Maha, ballpark of what being priced is cash. So right now, the cash position of Maha, considering the cash position and its future receivable, it's 1.2 times Maha's current market cap. So we do believe that with this cash position and with the Omani assets and with the way we are futuring future acquisitions, there's a great opportunity to enhance Maha's current market cap. We can go to the next slide. Here, what is interesting is a little bit about DBO. As I said, this was an asset bought from Petrobras recently. So this asset in Petrobras wasn't being how can I say, invested. Petrobras, it was a too small asset for Petrobras. So with simple capex or simple investments or very precise investments, we do believe that we can enhance the production in 2 years in around 70%, going from 2.1 barrels per day today to around 3.6, 4,000 barrels per day in 2025. This, as I said, the NPV of the 2P reserves of these assets, Peroá and Papa-Terra, it's around $155 million. And they are very net cash flow oriented. So in 7 years, we expect to have a total net cash flow of $161 million. And here, considering an average Brent price of $70 per barrel, which makes around almost a $20 million free cash flow only for these assets. We can go to the next slide. Again, please. So if we look, this is just a summary when we see all the Maha's assets, as we illustrated before. If we get the Illinois, which is the first one, the IB, the Omani assets, and the DBO assets, we have a total reserve of 21 million barrels, okay? An NPV, according to McDaniels and Gaffney Klein's certificate reserves of almost $200 million. If we add our cash position and future receivables, it makes a gross assets value, as I mentioned, of $405 million, with a net asset value of $338 million. What is interesting here is that the Omani asset, today, we're starting the production in 2 weeks, right? So we do have a good expectation that these contingent reserves can be transformed, let's say this way, into 2P reserves, enhancing even more our reserves profile. We can go to the next slide. Just some quick hints on the DBO assets, which are new for everyone from Maha. The Peroá asset, which is the first one, it's a smaller asset. It has a 2.9 million BOE reserve. It is composed of 3 basins, of 3 fields, Peroá and Cangoá. And I think the beauty here, like the optionality here, is this Malombe, which was recently discovered. And if we put this Malombe into operation, the expectation is to reach 16,000 barrels of oil per day production. Okay, so there's an optionality there, which is not being priced right now. Can move to the next slide. Papa-Terra, it's a bigger slide. It's a bigger asset. It has currently 15.6 million barrels 2P reserves, only considering Maha's stake. Let's remember that here, Maha's stake here is 15% of 3R offshore. It has an NPV of $122 million. It has a cumulative cash flow of $126 million. And this asset operates through 2 platforms, one floating platform and one fixed platform. So it's very different from the profile that Maha used to operate onshore. This is both Peroá and Papa-Terra offshore fields. Peroá much more gas-oriented, and this one much more, or 100% oil-oriented. We can go to the next slide. I think here's just to show you guys what we expect in terms of production. Just showing that the graph here, the upper right graph, we're not taking into consideration the Malombe field, which may increase a lot the production. And also, as you can see, the Papa-Terra asset, we have a very good pathway to increase production. I forgot to mention that Papa-Terra, if we look to the whole asset, there's around 2 billion of 2P reserves, which only 2.4% were recovered up to date. So there's a lot of pathway to be recovered. We can move to the next slide. When we talk a little bit about our money asset, up to date, we drilled 6 wells. We're about to drill the 7th well. As I mentioned, Oman today is basically composed of contingent reserve, which we expect to transform into 2P reserves. what is interesting in this asset is that aside from our good expectation of being transforming into a productive asset and enhancing our reserves, if we look to our neighbors, there are important companies that are operating nearby, like Shell, Eni, Occidental, all of them sharing the same basin with similar asset profiles. So this enhances a lot our expectation to have a very productive asset in Oman. We can go to the next slide. Here is just curving up a little bit about US, but I think we don't need to enter in details because US, as I mentioned, IB and LAK range, we're divesting it in a short term. Can go to the next slide. One again, once more. And I think just to cover the presentation, just giving you some hints on how was Maha last year results. So Maha's, if we consider 2022, we ended the year with $90 million of revenues, $55 million of EBITDA, and a net result of $22 million. But remembering that all of these results majorly belong to the Brazilian assets. So we sold the Brazilian assets. We enhanced our cash position to, as we sold for almost $170 million, $187 million. And if we look to our share performance, our share performance is very correlated with, the brand performance. So as the brand increases, our share increases. As the brand decreases, our share decreases. But last year, we had important events. We started by reaching Maha's peak production, almost 4.5 thousand barrels per day. We had some issues in our production, and as the Brazilian market is extremely hot right now in the onshore, we had very difficulties to find rigs to perform workovers, to drilling. So our production decreased a lot, but fortunately, at the end of the year, we recovered our production and we ended with that 2.6 barrels per day production. So this basically correlates a little bit with the performance of our share. I think it's this. I tried to cover in some minutes all this transformation that Maha faced on the past 3 months. Hope that I could be a little bit you guys could understand a little bit about what we're trying to do here. Thank you a lot.
Very much, Bernardo. So I will finish up with one question, and that is, what will be Maha's main focus in 2023?
Perfect. Excellent question. So basically, we can divide in two main focus, right? The first one is to find accretive assets where we can, jump in attractive multiples, attractive entry prices, and the DBO acquisition. It's an example of the kind of assets and the kind of multiples that we're looking for. Assets that we can not only pay cheap, but also enhance the production, develop it, because we understand that we have competence and team to develop it. And also, in another pathway is to develop the Omani assets, which we understand that that it can become extremely profitable. We will know this. We will know if we're in a good direction or not in some days, as we're going to start testing the production. But assuming that the results will come, Oman will also be a focus from Maha, and we expect to deliver profitable results there.
Thank you very much, Bernardo. Time is unfortunately running out, but thank you very much for your presentation.
Thank you.
Thank you.
Bye.